morning, ladies and gentlemen. Welcome. Test, test. Mic 1, 2. Test, test. Mic 1, 2. Woo! Woo! We're back. We're back from a little vacation out in Vegas. Took a little trip out there to the When We Were Young Festival. I did not feel young. My legs hurt. I did a lot of walking. It was insane. Loud, had to buy earplugs. Good morning, good morning, good morning. Hope everyone's having a good day today. We're gonna take a look here at the market, see what's going on. Let some people flow in. Set up a few more other things here. Get our global news up. Doop, 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 doop. All right. Get one more thing ready and we're going to start up. Take a look at these markets, see what's going on. Now, right now, market's down about almost 50 basis points, 0.5%. Let's see if we can find any opportunities in here. I think this is just all a little bit of a consolidation or pullback before going to 6,000 in the SPX at some point here. Feels like it's priced in. Give me one moment. What's up, 69 Conquer? What's up, CJ? Prepping just a few things on my end here. I want to make sure that if I see anything, I want to be able to execute into. All right, let's take a look here. All right, so S&P 500 today so far, pulling down slightly. Honestly, it's really nothing. It's been going sideways, right? Price action's been going sideways. We haven't really been doing anything. In this current moment, we're below that 5-day moving average, but it's still sideways, right? It's not a full declining 5-day moving average by any means. We're working now on the 4th week of not touching the weekly expected move, which is pretty rare occurrence. Sorry, the 5th week, I think. We went 4 weeks now. I want to take a look at market net flow. Market net flow is also showing fairly bearish here. So if you're looking to buy the dip, right, you'd want to see this maybe turn gray. But overall, it's a bearish divergence. They're flatlined right now, but you don't. Bearish divergences aren't the greatest times to go, obviously, long, unless if this turns gray, and then you start looking at more of what's happening over here as far as price action goes. So, kind of one of those things where you want to just sit on your hands and see if the market maybe has some key levels from a 0-day perspective growing in size that we can potentially trade up to. So right now, 581 is really where we're at on the SPY. So we're 10 cents below it. So 581, we're right about here. If I zoom in, you can see that we did tag already the lower daily expected move. The VIX implied move, which is a lot different, and that's because volatility has been rather high, is down here at 576. I don't think that we're going to be going down there today unless something dramatic happens. I think we're going to probably be floating around here, and if not, see a little bit of a uptick. So if I go over here, you'll see why I'm saying that is because from a 0-day perspective from the SPX, we're right there at that 58.35. We kind of undercut it and we're holding within there. These were the 0-day levels for the day, and 58.35 was rather large. Okay, this was 58.35. So while we're above here earlier in the day, this was standing out to me pretty significantly, was 58.35. We came in, we undercut it. We still are in positive gamma territory. And now we're kind of just floating in and around this level. So as far as like downside today, I'd probably be saying that right around this range would be our downside for the day. Pretty quiet because we're basically there. One second here. Okay, cool. Just making sure that my other stuff is working here. Okay, I think my live chat. Hey, what's up, Christopher? I think my live chat for X is now working too. I have to have my morning cough, my morning cafe. All right, so what did we talk about? We talked about the daily expected move, how we're coming right down into this area. There wasn't really much from a 0-day perspective other than that 581 right here in the very near term. We'll take a look at the total by strike. 582 looks to be like the upside kind of potential resistance area. So let's go ahead and mark this on our screen. So if you're playing a little bit of a bounce here in SPY, I'd be saying 582, you might run into a little bit of problems overhead. Okay. We'll just write gamma over here. Sometimes this area, these bars, these big green bars can repel price. So 582 would be a level to watch overhead. That's still below that 5-day moving average. But to see some relief can make sense. And then seeing if market net flow turns gray. The convergence, when it turns gray, all that's saying is basically the price of SPY is not moving with market net flow. So you can have counter trend moves to the divergence. So if the divergence is bearish and you have a counter trend move, it could be bullish, and vice versa. You know. Somebody asked, where do I get 0-day levels from? I'm on Trading Ticks right now. I also pull them from Gamma Labs. I like using Gamma Labs for SPX, and I apply it to this SPX chart, which is SPX 500 USD, which is CFDs. I use this one for the continuity of the chart. You can use regular SPX. It's off by like maybe 10 handles sometimes, but really that's the thing about gamma levels is they're specific levels, but they kind of act as zones, right? So if you think of gamma like as just a distribution curve, right? It's like a throttle for, we're not gonna get to the very specifics there, but if you think of it as a gamma curve, when you come up to the level, right, it can kind of pin in and around these levels. Right, so for example, 5,900 is the call wall. Actually, no, 6,000 is the call wall, but we'll pretend this is the main area of focus. Price can get above it and come back down and then kind of pin it around these areas. But when it really starts breaking from it is where you get that acceleration. One of the big levels here on the SPX that's been a focus has been 58.50. It's been kind of this point in the price action where you can see that we've been breaking above it, breaking below, breaking above, breaking below, above, below, and we're getting kind of pinned at 58.50. Now, the difference between today and the prior days is if we look at net gamma, take a look here that traders now are continually pushing to 6,000. I think 6,000's in our car. I think it's in the cards. I think we're going to 6,000. I think that's the case. I don't know how it's going to look like to get there per se, but I think that's where we're clearly going in the near future, as long as this structure kind of remains this way. Now, there are some levels of interest below this. So 58.50, first and foremost, it's going to be, we have to get through 5,900. 5,900 is the big dog over here too. But you can see 58.50, that's kind of where we've been just pinned around, and we're currently below. And there's really not much going on until 57.50, okay? So if the market wants to all of a sudden go into negative gamma territory and hold down there, okay, we can see a snapshot down, shake some people out, and then eventually maybe, if that's the end of October, eventually try to see that fourth quarter rally up into around 6,000 and potentially higher. I can't remember the exact JPM collar, but I know it's in and around that 6,000. If somebody can remind me of the JPM collar, it was like the high of it was like 6,020 or 6,200. I can't remember. I'd have to look at it again. Good morning, Mom. Morning, Christopher. Morning, Key. What's up, Exotic? Vacation was good. It was chill. It was it wasn't like, you know, there's vacation, then you need a vacation from vacation. I feel like this vacation was a vacation that I needed from vacation. You know, like, you know, it was a last minute, you know, music festival thing that my wife wanted to go to, so we went. And the next day after that, and I didn't really drink, so I was fine. But we had to we just relaxed and did a lot of walking. Like, Vegas is huge. Oh my gosh. I'm not a huge fan of Vegas. It's like overwhelming to me. There's like so much to do. It's very cool. Like, walking through some of those hotels, like, it's like mind blowing seeing some of like the structures there, like the Venetian, the Bellagio. I really like that area. Went to a couple nice restaurants. Somebody came up to me and said, "Are you Mike Silva?" That was cool. Hung out with them, or said hi, talked for a little bit. Very, very random getting noticed. Which is weird because I'm usually not on camera. You know. I didn't get to go in the Sphere. I wanted to. I didn't know if like we had to go to a show or whatever the case is, but we definitely we took the monorail back and forth many times to different like hotels and stuff. So we saw it plenty. Which is just out of this world. It's wild. It's so weird. It's so cool. A lot of people don't know this, but I was like, Sphere is traded publicly. This is the Sphere Entertainment. And as we're looking at stocks here, isn't it funny that this is actually contracting in volatility as we're kind of hitting around these 51s. And I'm actually bullish. I'd be more bullish leaning of this stock, not just from its technicals, but looking at just how the attraction that it brings in Vegas. And I know, and I can't remember the exact area, but Sphere Entertainment is looking to develop another location. I don't think in the United States. I think it is overseas. I can't remember. I'd have to look again. But overall, look at the chart. The chart actually looks good. The Sphere, right? There's the weekly. Here's the daily chart. It's above the rising 50-day, 20 days up there, but it's shorter term. 200 days still inclining. Earnings around the corner. It's going to be interesting to see how this one plays out, but could be just a big base building with some higher lows. Could be one to watch. Yeah, we'll take a look at BA. You can drop some tickers in the chat. Is it London and Dubai? Okay. Or one of those, yeah. I'd have to look again. It does sound familiar. And I remember, is it Dubai? Okay. It could be Dubai then. Yeah, I don't know. I feel like there was a specific city that I heard, or in a specific country. I feel like I thought I heard something different, but yeah. We'll take a look at BA. TAN's not down. EMPH is minus 40% opportunity there. Yeah, solar names. I mean, the thing with solar names. So look at. What's one thing that we know about solar? Right, solar companies for the most part. This is, and you know, you can fact check this sort of thing, but in my head, when it comes to solar, and I do have a buddy that owns a solar company. Actually, I take that back. I have two. One is a family member. But solar itself, highly capital intensive. Like, for example, in California, there is a company called SunPower, and they just went out of business. I'm talking huge, right? 20,000 employees, something like that. they just went bankrupt, right? And one of the main reasons, I believe, I'd have to check, but it's because the capital required for these and to hold these, in inventory, whatever they do. But when rates go up, it makes it more expensive to have these products, right? The higher rates go, the more expensive these products are as far as payment goes. So when I'm looking at something like TAN, which is a solar ETF, what do you notice here? It's been going basically straight down since 927. Okay? So TAN down to 927. It's at new lows for the year to date, for the year. Now, if I over here and go into TNX CGI, and you go right to here, 917. What date did I say? Let me go back to TAN. $927. $927. Okay, right here. Whoop. Okay. So the 10-year yield fires off like a rocket ship right here, and then TAN from 927 here basically goes straight down. So the reason why I bring this up is because if you are bullish solar, chances are you would probably be in the camp that you think rates are going to go down, which helps the margin of these products. And when the companies, all of a sudden, when their margin grows, holy heck, this thing is lighting up with news today. Let's cut it off. It's Boeing stuff. We'll take a look at Boeing. I think Boeing reported earnings. I think I do have to check that because I have a position in Boeing. Oh man, that could be bad. If you want a girlfriend, don't buy Prison Pro. What? Are you? Oh, you're commenting on somebody's thing. Okay. That's funny. You want a girlfriend? You don't hear the news? Okay, it's like so loud in my ear. Okay, well that's good. I turned it down, so I'll turn it up if oh, my leg's asleep. Okay, so back to the TAN because somebody had mentioned solar. So that's my thought process here is if you want to be bullish, solar names, I would imagine you would think that rates are going to come down. And here's the thing. I think that rates, I think that they're one extended. Like this is crazy move in rates. And this is taking place after the Fed cut. And also there's geopolitical tensions. Okay. Boom. We flew up to the upside. And yeah, it's getting frothy. That's for sure. RSI is getting a little frothy. So is this going to come down a little bit? Are we going to see some relief in solar names? Probably. Are we going to see relief in bonds? Like look at TLT, right? TLT tilt. Look at TLT. It broke this little trend line. It looked good right here. Actually, in fact, I actually traded it on this day and I held it. I think I got out this day. Or I got out majority of it this day and then I got stopped out this day. I can't remember. I'd have to look. But TLT, right? Straight down, boom. Price action's getting a little wedgy here. You have a little positive divergence in the RSI. So to see a little bit of relief or reprieve in the 10-year yield to come down and maybe TLT, and some other bond products pop up a little bit. Yeah, sure, right? Sure. And then look at the dollar, right? So still, this is crazy. This is crazy. And this is where I think a lot of people are going to, okay. This is where it gets really interesting here and why you can be very, very bullish. Not only are we moving into the back end of the year where it is typically bullish, right? There's a lot of, we have the election coming up, so implied volatilities are going to increase, right? So there's already a little bit of fear, not necessarily fear, but the markets are pricing in more risk. But the reason why it could be very bullish into year end is because if the dollar and the 10-year yield come down, that has historically, we've seen, not even that far, have been very, very bullish for markets. And the fact that the dollar has been rising like this and we're sitting at basically all-time highs, that's pretty wild. Like, that's pretty wild. So in my opinion, I mean, it looks like I wouldn't be fighting the tape and trying to like short this market. Like, let it digest. But I think the easier trade is going to be to buy the dips. As long as we can remain above this gamma flip line, and as long as we're holding above an inclining 5-day moving average, which we're not right now. Okay, this can change tomorrow. We can be gapped up, right? Or it can break down to the weekly expected move, which still would not be crazy to me. Right? If the market price comes back down to the lower weekly expected move, would you be surprised? I wouldn't. Market has been highly efficient. It's been trading inside the weekly expected moves. It hasn't even tagged them, right? For the last 4 weeks, working on 5. If we were to snap down and get outside the weekly expected moves and say down to this blue line is the quarter to day anchored volume weighted average price. The quarter just started, right? The quarter just started. So in theory, if we're just looking at volume, through the lens of the anchored volume weighted average price, based off of time and volume, the average person is in the green this month. Even if price were to come down here, they'd still be in the green. I would like to see a pullback, and I would like to see a higher low. I would like to see the 5-day average come in and then start to turn around. I'd like to see it flush out some people. That's what I would like to see, right? Now, with this floating up like this, it's just crazy to me, because while the dollar's moving up like this, look at gold, right? Gold just hit a new high today, again, a new all-time high, right? Silver, let's take a look at silver. Silver saw some gigantic moves from this little consolidation pattern over here. It's coming down today. Silver has a high correlation to gold miners. Surprisingly enough, silver's coming down quite a bit, and gold miners have hardly been tagged here. So that leads me to think that gold miners could actually, if silver comes off a little bit more, gold miners could come back down because of that correlation. So I think those would be the catalyst for something, for the markets to move higher. I'm still leaning more bullish here, but I would prefer to see some sort of a flush out. Right? Get a little fear into the market, move off of these extreme levels, let the bears have a day or two, maybe a week at most. No, I'm just kidding. And while that's happening, you just don't add exposure. You just let the market do its thing. Because if the market really does want to go into some sort of tailspin, what's the point in fighting that? Right? Right now it's telling us, hey, be cautious here. Okay. Cool. So I'll be cautious. I won't add more exposure unless something's very, very, very well, a very good setup. And I'll just let my market take hits, or let my portfolio take some hits. And I'll just manage the current positions I have on, because the positions that I have on right now in the market, I've already came to the conclusion that I'm going to lose on all those positions, right? So if I don't lose on those positions, I'm happy. If I do lose on those positions, I don't care because I've already planned it out to lose, right? When you make a trade, when you think about where you're going to enter, the very first thing you should be thinking about is, where am I going to be wrong? And just be like, and how much am I willing to lose? Am I willing to lose $100, $500? $1,000, $10,000. It differs for everybody. $10,000 for one person might be 0.5% of their portfolio, and they're like, I don't care if I lose $10,000. It's 0.5%. Some people might be like, dude, if I lose $10,000, I now am in debt, right? Or I blew up everything. So it's all relative to the individual. You got to know what your risk tolerance is. I typically find my risk tolerance is around, on a position, to lose about 0.5%. Not on the position itself, but like of my like an individual equity. Typically, I'm like, I'm totally fine if I lose 0.5% of my working capital on a trade, right? So if I have 10 trades on, I'm losing, and they all go bust, I'd be losing like 5%, right? If I did my math correctly. And to lose on 10 trades, that means the market's telling you straight up, like, and by the way, it's not hard to come back from losing 5% of your portfolio. You got to make what, 5%, and you come back. It gets exponentially harder when you start losing larger percentage points of your portfolio. Okay, let's hop over to Boeing, because I talked about the TAN and stuff like that. Let's. Somebody had mentioned Boeing down 3%. That kind of sucks. Although it's not really, actually. I think my original entry was here. So I think I'm still up in the position. We had this gap up over here for whatever news. So, yeah, I don't know. I'll see how this resolves. Boeing's a dog. Boeing's a... Although airlines typically do have a good Q4, so I am interested. The position size that I took on Boeing was small enough to hold through a quarter, just like even through earnings, right? To even hold through earnings. Because it was small enough, and it was like a $9 expected move. So I think it was a $9 expected move. It was roughly a $9 expected move when I looked. So a $9 expected move would take me down to and around basically my entry point. That's why I left it on. Jets is the airline ETF. And when we talked about Boeing on that individual video, we talked about it when Jets was right about here. Now it's getting a little frothy. Maybe it needs to come in a little bit, consolidate, build a base out, and boom. So, I mean, that looks pretty decent. We'll take a look at oil, because oil is obviously, this is a big portion, right, to the expense of airlines, right? So, and transportations for that matter. When the price of oil is higher, it's going to affect the margins of companies that have a big expense in oil. If that makes sense, right? So higher price oils mean that, you know, airlines, they're going to have to pay more for fuel, right? They're going to, truckers, consumers, whatever the case is. But if oil is going to be, you know, settle down and come in a little bit, steep declines actually also signal other things. But as far as strictly looking at the airlines, you know, that could help increase the margins if fuel cost goes lower. Overall potentially helping result in a better performing stock for like airlines, for example. I think didn't Save get like clipped for something like something about potential bankruptcy? This thing's all over the place. I'm not interested in trading this kind of stuff. I mean, like it's up 97% in like 4 trading days. That's a little bit too rich for my blood as far as volatility goes. So if I enter into anything like this, right? If I enter into anything like this, it's going to be a very, 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 very small position. The last time I think that I've entered into something that moved this quick and this fast in the midst of volatility, that is, not after the contraction, but in the midst of volatility, was like one of the banks when the banking crisis was happening in March, right before the Bank Term Funding Program, or right around that area. And I got lucky. Like I got into the position. It halted, and then it was up 60% after the halt about an hour later. Talk about pure luck. Could have been down 60%. And if it was down 60% or 100% for that matter, I would have lost 1% of my portfolio. Or 0.5% of my portfolio. Somewhere around there. I can't remember. Okay, so there's that one. DAL also looks pretty darn good. Look at like DAL. Boom, it's breaking out, it's consolidating. So this one's holding up rather well. It does have a little bit of a negative divergence here. Earnings is out of the way. So earnings, we saw a nice move. Boom, 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 and now it's consolidating. So this type of stuff, yeah, now you're looking for the pullbacks. I'd like the 20-day to catch up, maybe a couple more days of just sideways price action. I'd be looking to buy this, boom, and get some follow through on some strength. So that's one to watch. What's another one? UAL. A little frothy right here, so I'd be wanting some more consolidations on UAL. I just pulled up DAL. Love, LUV. Look at this one. This one's looking like it's setting up. Earnings is like today. No, tomorrow. All right, well, Earnings tomorrow on on LUV. Southwest. I like Southwest just as the product, but I don't know anything about the company specifically. But I will tell you, price action is getting very, very tight here. Q4 is typically decent for airlines. We'll see. I'm not going to enter into a new position into a binary event, but I can say that if we do see a nice big green bar, then I'd be looking for the follow through consolidation and then maybe play boom up higher if that's going to be the case. And if it gaps down and goes down, I would probably just wait it out, and if it turns back around and sets back up, maybe go from there. But that would be my thought there on love. It is getting very, very tight. Let's take a look at the expected move. It's about $1.39. $1.39. I mean, it's about a 5% implied move. 5% to the downside, 5%. So even down to the downside, if we hit the lower expected move, that'd be right to an inclining. So if we stayed within that one standard deviation and we came down, yeah, that would be just right to the inclining 50-day and then the 200-day, which is rather flat. So I'd be watching. I'd have that on the list, definitely. I'd be watching that. Yeah, we can take a look at CART. Yeah, CART is another. The other one's great. That one made a nice move, right? So CART was, I think we talked about CART right here, right? And then again, it started consolidating. I know it was on the tight list here, and it may have been again. I believe it was. I left it on there. And now we just have an inside trading day. It's above a rising 20, 50, 200. So if you're in it, I think you're good, and you can potentially update your stop from maybe this low to this low. Or maybe like, you might change it like, oh, I'm just going to 50% here and then 50% here just to reduce some of the risk. But a measured move of this, breakout still would be targeting up here north of 48 to 50. And there's no reason yet to be worried about this position, right? Earnings is not until a little bit later. I get that you have a little bit of a negative divergence here in the RSI. So it's basically saying price is going up higher, but we're getting a little bit weaker of a reading. Okay, whatever. That happens all the time. I get it. But even if it breaks down and comes back in, I mean, it could still do something like this over a course of time and still rip higher. So the overall trend is still holding rather well here. You'll probably have to go through more base building. So it depends on if you're okay with letting that happen or not, depending on how much capital is in a position, if you want to get it tied up. If you don't feel comfortable with that, you can always reduce exposure. And if it sets back up, you can add back in. So you don't need to worry about the position, right? So you don't need to worry about it. It's just another piece of inventory in the portfolio. If you're oversized, I can't help there. If you're oversized, you're going to eventually, if you're oversized in a position, it's going to affect you poorly, right? You can have it affect you positively multiple times, but if you have one oversized position and it goes against you and you get stubborn with it, you're going to have problems. Like, it's going to happen, hands down. So you got to always be able to cut them losses, especially on oversized positions, quick. And the only time you should take an oversized position if it makes sense from a risk-reward perspective, right? If the risk is like, okay, I'm taking an oversized position, but I'm still utilizing the same risk, like, right? So if I played the breakout here, but I'm just saying, hey, but I'm going to be getting out right here instead of right here. So I'm going to so my position, it's technically the same size, but my risk, right? So if I lose $500 here on this down here, but all of a sudden now I'm losing $500 in this small area, what you're doing is you're backing your risk into a smaller pocket. So the position size and the loss is going to be the same. However, because volatility is so tight here, you'll probably lose more frequently, but the time that it goes in your favor, the risk to reward is significantly greater, right? So 1, 2, 3, like 3 to 1 versus 2 to 1 right here. I don't know what I'm talking about. I'm just rambling right now at this point. Hopefully it helps. Boeing is going to double digits, maybe. Yeah, cool. Perhaps. I mean, it is in a downtrend, so I can see that being the case as long as the downtrend remains. You opened a position in DAL. Tomorrow is Love earnings. Yeah, I'm sure that Love earnings could probably affect DAL to an extent, right? Depending on like what the earnings look like or if they mention anything about the industry. Did I talk about 3M yet? No, I haven't talked about 3M yet. We can look into that. I think that I've been seeing some volatility kind of peek its little head there. Looking at a long-term investment in Oklo. Oklo. Yeah. I don't like touching things when they're volatile like this. I'll tell you what, though. I'll tell you what. There was clear signs right back here. There was clear signs back here. And I'm not just saying that to say it. I'm not saying that to say it. I legitimately saw clear signs right there. I'll try to show you because I can't remember. Oklo. Wait, did I just see? Wait, is he in here? I gotta see if he's back in here. Give me a second. Sorry, I just saw somebody that was in my chat for a while, but he took a break, and I just noticed that like we have a mutual server now. Okay, sorry. My bad. Okay, and we'll go through this. Okay. S&P 500 still sitting around its daily expected move. Okay, so October 14th, higher beta names, Okla and NNE are seeing some intraday vol spikes. October 14th. I was right here. So on October 14th, out of nowhere intraday, bam, 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 we started seeing just massive volume come in. And these type of things can get picked up in multiple ways. I found it, I forget how I found it, to be quite honest, but I know that the name popped up on my party starter scan. This specifically in NNE. Now, did I know that this was going to happen? No. Did I trade this? Yes, I did. Did I get out way before this? Absolutely, right? Because I don't know where it's going to go. I typically get out of positions a little too early anyway. That's like one of my things. Because I just lock in profits, or volatility expands, right? If it expands, I want to keep my equity curve smooth. And the only way to do that is by getting out of the position or by reducing exposure when volatility expands. That's the only way, right? So now, I mean, you're seeing swings from like today's high to today's low. It's down 13%. So when you're thinking about like, okay, where can I enter? Like, think of the length of, like, okay, how long are you planning on holding this for? If you're planning on holding it for a very long time, you're going to be going through 20, 30, 50, 70% swings, up, down, whatever, okay? That's the case. I mean, just from here in 5 days, right? If it can move in 10 days, whatever, I don't know, 150%, it can fall 80%, 70%, right? 50% in a matter of a couple of days. I mean, from today's high, it was minus 13%. So when you approach something like this, either you wait for price action to coil back up and get tight. Like, for example, if it comes down and then it shook people out, but it sets back up. Boom, right? It could take a long time, but even from down here or from there to here is minus 43%. From where we are right now, just to down to this stupid little line that I drew, or the 20-day moving average is minus 35%. Are we going to hit there? I don't know. But what we do know is this: a lot of volume, a lot of potential institutional type volume came in. Okay, now it's going to digest. and it's going to have to, we're going to have to see how it sets up. Now, can it go tomorrow and go like this? Yeah, for sure. But even then I would be like, yeah, no, I wouldn't touch it. I wouldn't touch it with the 10-foot pole until it sets back up and allows me to set back into risk. Now, if you're thinking like, I'm going to hold this for 20 years, okay, then don't worry too much about the position side or the position entry, right? You don't need to worry about that. All you have to do is say, okay, I'm going to buy a little here and then I'm going to buy a little there. What you need to worry about is how you enter into the position through time if you're going to hold it for 10 years, okay? Because in 10 years, if it's at $100, I mean, if you bought it at 16 versus 20, is it really that big of a problem? Not really, right? So what you would do in that case would be like, yeah, I'm going to invest $500 here, maybe $500 on the next fall, you know, I'll invest whatever I don't know, you know, whatever is would make sense to you individually. That's how I would approach it if you're thinking long term, right? And I wouldn't approach a high beta name. For me personally, I wouldn't approach it like saying this is going to be 30% of my portfolio, because at that point, if it's overweighted in your portfolio, the only way that that'd be okay with somebody like me is if I'm okay with that type of risk, right? Because if all of a sudden I lose 50% on this position and this is 30% of my portfolio is going to be down 15% on a single position, and it's going to probably wipe out all the work of every other trade. All right, so you got to just think about those things. Length of time you plan on being on it, if it's an investment, right? If it's a specific trade, you wait for it to set back up, right? Let volatility come in and then try to play it when volatility expands again and hopefully it goes in your direction. Sometimes it won't. If you're thinking long-term, say, I'll buy it on these pullbacks. If it's down 5% today, I'll enter a little here and maybe it'll drop down to $14. Maybe it'll drop to 16 and I'll add a little bit more. Maybe it drops it a little bit more. And then you're averaging into a position very slowly. Like say if you're like, I want this to be worth 5% of my portfolio, right? I mean, your portfolio can grow over time, but you're going to be scaling in 0.5% every single opportunity that you see the dip or whatever the case is. So it's like, okay, I'll start, right? Say if you're like, okay, I have 5% I want to bring into this, and I want my portfolio to be 5% Oklo, which is a friggin' gigantic position in the grand scheme of things. Okay, that is a big position for a high beta name. But let's just say for this example, 5%. Boom. Okay. Now, if you just enter right now, right here, you're probably going to be worried about the position. But if you're like, okay, I'm going to break this in. I'm going to be holding it for a long time, so I'm going to take 50 basis points at a time. I'm going to enter 50 basis points here, maybe here, maybe here. That's now I'm at 1.5 size position. All right, maybe it goes up over here. Okay, now I'm seeing strength. I'm going to add in a little bit more, and now your average position is right around here somewhere. And then you're just building into a position. Those are some of the ways that I would go about thinking about it. So you just have to kind of know what would work best for you. As far as specific levels go, I mean, I personally would find the levels when things slow down a little bit. The trade was right here for me. Boom. And for NNE, which I did trade, I traded it this day right here. I traded it right in around this area over here or right on the breakout. I can't remember the exact entry. And I scaled it out the same exact day. I scaled it somehow right into the close, basically. And then I held some runners on this day. And I was like, yeah, I'm just going to let some runners go and see how it works. Or I set it over here, and then it went down. But I was like, I already exited bulk of the position. And then it flew up. I'm like, oh, I'm exiting, right? I don't know where this thing is going to go, but I'm just out. Because this little move from here to there is 51%. And just to let you know, like you're like, wow, you got 51% on the position or 25, 30%, whatever the case is, until I got out. I knew that volatility was coming in, right? So my position size is not big. It didn't move my entire portfolio 20%, 30%, okay? I'm not stupid, right? It moved my portfolio like 1% or 2%, which is insane for how small my position was. And it helped my portfolio basically just be slightly up on the day because my other positions were not performing. So it made a big difference. Low capital in the trade, helped my other positions, managed, it made a big difference. So when people see that, they're like, wow, this guy found a 50% runner, 100% runner. Cool. But it's not like I traded my entire portfolio in this thing, right? I don't have that risk tolerance. I'm not like that. I am boring. Okay, cool. All right, let's take a look here at the chats as my rant goes on. Monster scanner. That's it, not monster. Wait, what's going on? I got lost in the chat a little bit. Sparks, I'm not. Are you asking about the monster scanner, or are you talking about the party starter scanner? I forgot to say the name of it. Yes. Yeah, party starter scanner. That's the one that does the unusual volume. Yes, I'll look into Lulu, JD, Uber. If you do an RSI difference on the daily from 12 June and peak to went down. Oh, okay. K's, are you bringing up the RSI from the SPX? Because yes, there are, especially on the weekly time frame, those divergences on the S&P 500. Let's take a look at the S&P 500 really quick. Okay, it's getting a little bit more price action to the downside. I'd be watching the weekly expected move. All right, S&P 500 coming in. Earlier in the trading session today, if you were here, what did we say? Right? 582 looks like the local resistance. It came up to 581.67. Market net flow was still bearish. If we turn gray, we can see a bounce. We saw the bounce. It started turning red again. Okay, woohoo. Price action's down, so it's one of those sit on your hand type days. Still is. I would be interested down here, actually, a little bit for intraday stuff if it were to come down into here. Even though that's below a 5-day moving average, it's still flat at this particular point in time. We are undercutting the gamma flip line. So this is now undercutting kind of the area where I saw as for the low of the day today. So we're currently under this. Being in negative gamma territory, this is where volatility can increase. We didn't close below here. So I look for the close, but even when we're below it, volatility can still increase. We've shown that. So below a gamma flip line, we haven't been below the gamma flip line for a minute here. Let's go look at SPX gamma time series. Yeah, we haven't seen negative gamma really since 9/17. We saw like a little spike here at 10/7, and we marked that out on the VIX. But we've been in positive gamma really since then. So I guess, yeah, 10/7 was the last day that we closed in negative gamma territory. So we'll see if we close there. I don't know. We'll see. See if anything's changed from a 0-day perspective. No, 58.35. I don't know. This to me just says we're going to scream right back up. But I'm not willing to put my capital at risk to do that, right? If this was different, if we saw people reaching out here, and that could change. If we saw more people reaching out further, like, right, okay, so maybe 58.15. I mean, we're basically there. But this is still a main area of concentration is 58.35. Market net flow is bearish. So that is not the greatest sign. 580. Yeah, so I would say if this can hold and this actually comes down into the lower weekly expected move or down here, like a quick hit, I would probably look to play a bounce of some sort there. Depending if this structure stays the same, but right now it's not. So now I just would say, sit on your hands, let's see if there's strength come in. So when okay, let's talk more specifically. When price does this, when it starts breaking down or something like this, and you start to see an increase in volatility when we're below this gamma flip line, remember, volatility, when it increases, it can be for the downside and the upside. So when I go into my 0-day levels and I'm saying, okay, well, nothing's really changing from this perspective, just be open for the possibility of a rip your face back off. So what I do is I'll come into like the smaller structure. So like a minute or 2 minute, And you can see that we're seeing kind of volatility increase here, and it's just going sideways. So what I would like to see is, you know, a higher low of some sort, right? Some sort of higher low, and then start to break above one of the, and then change structure this way, right? Where you see all of a sudden, instead of lower highs and lower lows, you start to see a higher low and a higher high. And then from that point, I would look to see what the risk looks like and try to play a trade back up from an intraday perspective. But as far as right now, from a 15-minute perspective in a swing position, I'm just on the sidelines now. On the sidelines, I don't add more exposure. I manage what I currently have on. And when things change back, I look to add back in. Cool. Okay, so let's go look at some of these names that were mentioned. How do you replicate your trading view indicators in TOS like the Party Starter scan? The Party Starter scan is a free scan on FinViz that I put together. So you can go to FinViz's website, FinViz, FINVIZ. And I put a video out there on YouTube. It's like my most watched video for whatever reason. Probably because it found AMC at $2.50 before the whole explosion in GameStop and all that stuff. Volume's coming in. Yeah, I mean, that's typical, Spark. So if volume's increasing right now, that makes a lot of sense that volume's coming in, right? When you start breaking these expected moves for the days, I mean, you get dynamic hedging that can kick in and flush price. And then when you're negative in an environment where volatility is picking up and increasing, and you get more sell side, the volume can increase too. It's very typical. But like I said, if I'm looking at the structure of zero date stuff, it's not changing right here that much. So this tells me I'm like, oh, careful here, because if you're getting too bared up, well, we can see price literally snap right back up, right? So we'll see. I mean, we're down 66 basis points. Let's take a look at the Qs actually while this is taking place. I don't have my levels on the Qs right now, so I'll go ahead and pull it up. Daily. And we'll pull up some of those other names, by the way. Is this accurate? Did I just type in the wrong thing? I did type in the wrong thing. What did I do? $4.99. 29. Okay. Sorry, I didn't update these ones. So I'm going to do that really quickly right now. What I'm doing right now, for those that don't know, is I'm updating the weekly expected moves on the Qs and the SPYs. I'm just typing them in correctly because I didn't put them up. I didn't update on this chart. Okay. Zoop. All right, here's Qs. So Qs did pull down into the quarter to day anchored volume weighted average price. They're below the 5-day moving average. We're outside of the daily expected move here too for the Qs. As far as like the implied move based off of the VXN, which is NASDAQ volatility, you can come into, now some of you may have this indicator. I gave it away. Did I put it here? Here we go. I don't know if this is the updated version. I think it is. Okay, so for those that may have not have seen it, in my Twitter, I posted the, for some reason, TradingView kicked my script. They said, they didn't give me a specific reason, but I have to go in there and like, I emailed them and like, yeah, what do I got to change to make this available? But the script works fine. And then I published the, if you're in the Discord, in the announcements channel, I posted the script that's formatted correctly. You just copy it and you could post it into your Pine editor or whatever, and then you could just get it. But basically, this right here is called vol bands. Call it whatever you want. I don't really care. But it's taking the implied move, right, based off of the volatility products in some names, right, that have a volatility product. So SPY has a volatility product. It's called the VIX. It's the S&P 500 volatility index. And we do a quick calculation, very basic calculation. It's like taking that square root of 265 or whatever. And it pumps out upper band and a lower band. That's the implied move based off of basically, you think of it in terms of standard deviation. You know, that's what today is right now, right? So this is the implied move for today. Going into tomorrow, the day hasn't closed yet, but it's showing you kind of currently where it's at. So these levels are going to change for the next day. But now if I go into like the 5 minute, you'll see, let me change the colors because I have my weekly expected moves on here. I'm going to make the daily implied moves purple. Let's just do that. Okay, there you go. So what you'll see here is the daily implied move for the SPY is down here at these lower levels, right at about 576. Okay, so if I go to the Qs, because that's what we wanted to do, it's going to go ahead and put these levels on this chart, and these are based off of the VXN, which is NASDAQ volatility. So it does the calculation there, and we're not quite there yet. So we're below the daily expected move, but the lower level for based off of volatility products is 489. So my point here is, you know, you might look at this and be like, dude, whoa, it's way outside of its daily expected move. And I'd be like, yeah, okay. But what's weird about this is volatility of the expected moves has been coming in because we're in positive gamma territory. But volatility has been remaining rather high in a lot of these products. So I've been showing both of them to kind of give you a zone, a level, a kind of an area where price could come into. And that's what you're seeing here on the SPY chart, right? That's what this zone is that we're currently in. Oh, man. Right? Below the daily expected move, but above the implied move for the VIX. Now, when volatility comes in, right? When we get through October, the range of these boxes, my guess, are going to compress. They're going to come in alignment a little bit better. But if you look at like if you look at, you know, you can look at, let's look at a time series. Let's see if this does it. No. Huh. Which one do I want to look at? Let me think here. I forget which chart it is. I thought it was a time series. Is it time series? Dang it, I forget where it's at, but it shows you kind of come on, man, where is it at? Open interest. Somebody can help me with this. It'll show the dates at the bottom, and it'll show you it increasing because of the election. And when volatility remains rather elevated, or the implied volatility is rather elevated, that's what you're going to see. That's basically what I'm trying to show here is that it is rather elevated. Okay. Now the VIX, if you understand the calculation of the VIX, it's looking at the S&P 500's options chain, but it's not looking at like the 0-date levels or, you know, the 1-day moves. It's like 30 and beyond. Okay. So the daily expected moves are very near term. And the VIX is a different calculation, but these can come more in alignment. But when they're more out of alignment, you'll see bigger spreads take place. And you got to be aware of this because that's where things could get a little interesting, right? Where you can break these daily expected moves more frequently. And they do hold weight. The daily expected moves do hold weight, but more importantly is the weekly expected moves. Okay? Ah. So how do I replicate the indicators in TOS? I did share the TOS indicator, by the way, for this too as well. I call the vol bands for this thing too. So if Qs come in here, this would be that one standard deviation move. This would probably, you know, if nothing changes really from a gamma perspective, probably could be a low, could be seeing some sort of a bounce. So that'd be a level, you know, a level of interest to pay attention to. And still nothing's really changed here. 58.15, this is growing. 58.70, 65, 57.65 is growing a little bit. Let's watch. I want to see if Qs can come down here, because now we might actually have some sort of a trade set up for an intraday people. Okay, let's see here too. I want to read the chat here. Sorry, my bad. I've been kind of just mumbling on here. We'll look at Lulu, JD, Uber. Yes. Any thoughts on KO? We can take a look at that. What long entry on SPX looks good to you? I don't know if you're talking intraday, if you're talking. Look, I think the S&P 500 is going to be hitting 6,000. I think we're going there. How we get there, I don't know, but I think we're going to go there and test it at some point this year. Like I said earlier in the session, I'd prefer to see some sort of a flush out. And when we're below a 5-day moving average, right now it's flattening, so it's more of a cautionary thing. And when we're in negative gamma territory, so take both those into consideration. When that is the case, I'm not looking to add exposure. I look to manage positions, right? So if my positions start getting cut out and I start getting stopped out of all my positions, guess what? You know, it is what it is. I'll look to add more exposure, but that means my P&L curve will go down a little bit and then it'll flatline. And then when the market starts to show strength again, I can try to get back into that. And if we are going to recoup and recover, my positions can play out in that direction. It doesn't necessarily mean that they have to correlate completely to the market. That could come down to more portfolio diversification and such, but my exposure in the markets this month is rather low. Yo, what's up, LA to Mex? It has been a minute. Good to see you in here. Okay, so while that's taking place, let's take a quick look at some of these names that people have been mentioning here. So Lulu. So Lulu is in a longer term downtrend, right? And we're seeing a little bit of a bounce here. So if you're playing this in the shorter term, just understand that you are going up against a declining 200-day moving average, and at some point you're going to retest this, and it's probably going to find some pressure there, right? We can get above it, but it can pull back down if this is going to continue, and it's going to take a long time for this to typically heal, flatten out, and turn back around. If you're playing in the short term, maybe look for reconnects of an inclining 20, inclining 50, maybe set back up and play through. And then you have lower risk to reward. So overall with Lululemon, yeah, it's more of a cautionary thing because of the level of hurt that it went through. And it's going to take a long time to heal, that kind of thing. I prefer to play trades, like see how much selling it took place here, but it was into a 200-day inclining moving average. Well, the same thing could happen on the flip side where you see all this buying pressure. Well, it's doing so into a declining 5-day moving average or 200-day moving average. So same thing here. Boom, it was inclining. So we haven't really tested it yet. So I would say, yeah, I could pull back a little bit and start shooting up. I'd be watching that. And if it gets way above it, just be mindful because it can pull right back down because the overall trend is pulling down, right? And if you're swimming up a river, right, it's a lot harder to swim up a river when you're going against a current, which you would technically be doing in this situation on the longer term. If you want to go shorter term, go into the 5-day moving average, 15-minute time frame, and you're like, wow, it's inclining. Yeah, cool. There you go. Then you can play it, boom, play it to the upside and have stops as you go and manage the position from a shorter term perspective. And then the 200-day doesn't matter as much, but you can look at it in reference, if you start getting up in near those levels. So China stocks, I'm pretty bullish on China equities. I'd prefer to see how they kind of set back up here. But JD, BABA, PDD, they all look the same, right? So look at BABA, boom, down 2% on the day here. It's pulling in, but it's consolidating after a gigantic run up. All right, let's look at KWeb. KWeb, same thing, down slightly on the day after a huge move, and it's consolidating, pulling in. Now these do have a tight correlation to copper. So take a look at copper. Copper's down on the day, but it's still holding this prior area of resistance. Once resistance is broken, it can become potential support. It's also pulling into an inclining 50-day and inclining 200-day moving average. So if this pullback took place, right, the same time that, guess what? JD, right? JD. We'll go to JD. Let's see where it topped. JD topped basically over here on 10.7. Go over to copper. What day was this? That was 9:30. When was 10.7? Right here. Boom. Okay. So it started technically started sinking off here. Copper started falling off, and many China equities followed just like JD. So my thought here is, if this stimulus that's going on in China is really going to help out, and there's a tight correlation with equities like copper, if copper is going to find some sort of a move here from an inclining 50 and inclining 200 and head up, I think that there's a strong possibility that China equities can play out back up to the upside. And to add to that is, if you look at something like EEM, all right, EEM's been holding up rather well. A big percentage of this is China equities, but you can see that it's also flagging here. And on the flip side, right, on the flip side to all of this is, take a look at the dollar, right? So if you look at the dollar and you look at currencies, the dollar's been on a monster tear. And when do we start really seeing pressure again? Like it was in 10.7, you know, right around here. Boom, the dollar started moving up higher. So there's been somewhat of a correlation here, where if the dollar comes off, or when it lifts up, you can see pressure on emerging markets as well. And if it starts coming back off, maybe that, alongside some of these other intermarket plays, can very well help products like JD, right, or BABA, right? And we might start seeing bids back into these, right? Or if you want to, still high volatility, but a little bit less, right? KWeb or FXI, right? So right now it's digesting a gigantic run up in kind of this flag formation. So that's my thoughts on China equities. I'm just watching the consolidations, and they're very choppy, right? Obviously, they gap up, they gap down, they gap up, they gap down. Incorporate that within your position sizing. Uber. Uber was one that I was watching right here on this back test, right? So we broke out of a trend line, declining trend line, and it pulled back into inclining averages. Right there seemed like a great opportunity. Okay, this is one of the trade ideas. Somewhere. No, they don't all play out like this too, by the way. But yeah, Uber on 10.2 it was. All right. Here's Uber, 10.2. Right. Pulling back down into these for a back test, and you want to look to see if there's strength that comes from it. We started seeing strength the following day, back above the 20-day, and boom, this day happened to be a nice big move. So you typically, on these big moves, you want to update your stop losses, take potential profits. This happened on the back of the Tesla robot day. And once again, we're pulling back down. You know, we're coming back down to an inclining 20-day, and it's just kind of resetting itself, right? This could have been an overshot because nothing happened with Uber. It was really just the market saying, we don't like Tesla here, so Uber still has a shot, right? So if the market really liked what Tesla was coming out with, maybe perhaps Uber would not have seen that success in this specific day. But overall, it's still holding up, right? So Uber's still holding up, still in these areas, right? Maybe it takes a little bit more time to set back up. But yeah, Uber's fine. Right now, at least, you know. KO. So Coca-Cola, let's see here. Coca-Cola was looking real good here, but it looks like it broke down, and now it's, you know, we retested that 50 in a declining 20-day. So right now, in the midst of this volatility, it looks, what was this, earnings? Yeah, so earnings came out, volatility expanded. Now I would give it time. I just let it set back up. I wouldn't touch this. If you're in it, depends on when you got in it. If you were in it like through the main breakout point and you held it into it, I would have definitely probably got us stopped out at minimum right here, but most likely it would have been right over here. Because we started basing back out and we started holding below the 20-day, and this little kind of, this day right here, as we kind of came back in and then started hitting back under. So we started breaking out and then we came back in and undercut this stuff. And that right there would be kind of a sign of the saying that, yeah, we see strength and all of a sudden weakness comes in. It's either I exit some of the position, or take some of my profits off, and then go from there. But then you could kind of see we get below the 50-day moving average. It's holding below there. If it recouped here and set back up, I would probably have looked to add exposure, as long as, earnings passed. So right now, Coca-Cola is, it's just a nothing for me right now. I'm not interested in buying it here. Where would I potentially be interested in buying it? Perhaps if we come back down to the 200-day moving average, right at about 64, 65, because that would also be a potential back test in this area. And if we see strength from that, that could just be overall a breakout back test in strength. So that could be something to watch for. Yeah, we'll pull up these other names that are coming in here. Give me 1 second. I'm going to fill up on some water. S&P 500, it's just kind of doodling around here. Not too surprised. Q's doodling around. Market net flow is still bearish convergence, bearish divergence. 0-day levels. I'm sorry. Still the main area is at 58.35. 57.65 grew a little bit with market net flow being bearish. So I wouldn't rule out more downside, but I wouldn't rule out a rip right back up, to be quite honest. I wouldn't rule that out. So careful there, bears. And careful bulls. Still one of those things where I just kind of sit on my hands. I want to take a look at if we're in positive or negative gamma territory. We're right there at the gamma flip line, basically. Okay, I'm going to leave this right here for right now. I'll be right back. Quick break. Be right back. Somewhere over the rainbow, skies are blue. All right, we're back. Okay. Take a look here at chats. Give me a second. Give me 1 second. Okay, I'm back again. Oh my. Okay, yeah, we'll look at T. Let's look at T. Market's pulling back in a little bit. Woohoo, surprise. AT&T. AT&T looks very bullish. Yeah. Big move today off of, looks like what, earnings? This kind of reminds me of Uber, right? We talked about AT&T way back here on this back test, and then Uber saw a nice big move. Looks very similar, right? This little downtrending trend line, and boom. But AT&T looks incredibly bullish here. Chasing it up at these levels. I mean, if we close up here, you typically get follow through. I'd prefer to see consolidation, but it's also part of a larger consolidation. So if you enter in here, I mean, your stop would basically be down here, which is kind of a distance. You know, 5-6%. It's actually kind of normal, actually, for me. But overall, we took out this high here. Earnings is out of the way. Market looks like it likes what it's seen. I would prefer to see it kind of consolidate and pull in maybe to an around 22. 5-day moving average catches up during that and get some follow through. Yeah, so AT&T looks bullish. It'd be a big red flag if all of a sudden we cross back below here after seeing this strength in earnings past. Then I would say, yeah, give it more time. But right now, communications, boom, looking good. What's VZ looking like? That earnings came out, not a great look. So I wouldn't be, I mean, it's still above a rising 200-day, but not nearly as good as the look of AT&T. How about T-Moose? Also looks pretty darn good. We had earnings, was that today? Or is this after the bell? Wait, is earnings out for these companies on after 10/23? So it's after, give me a second here. Did T-Mobile report or no? T-Mobile reported. Okay. So T-Mus is reporting after the bell. So I don't establish new positions there, but T-Mobile, very bullish chart, right? Looking at a $9 expected move for T-Mobile. All right. You've been hiding in Discord, LA? That's funny. I didn't know you were in there. That's cool, man. Good morning, Jalen. Yeah, Christopher. So this 5-day moving average thing on here, this thing right here, it is an indicator. I originally saw Brian Shannon post it. He didn't post the indicator. He kind of like gatekeeped it for people that is part of his service, which is fine. I did share this, and I made it public. If you want this, I posted it. If you're in the Discord, it's posted there. But I have it, the link, somewhere for Thinkorswim. Hold on. Let me find it. I think I called it Trend Changer. I don't know what he calls it. I just called it Trend Changer because he didn't have a name at the time. Okay, I think this is it. What is this, on YouTube that you were asking? All right, anybody that wants this on Thinkorswim, I'm going to post it in the YouTube. I guess I'll post it on Twitch too. There you go. You copy that link and you go into your setup and you open shared items. Open shared items and you can post it there. I think that'll do it. Okay. Is there a gamma flip line? LC is asking about a gamma flip line for NQ. Yes, there is. I personally like to look at the S&P 500. It's a much more liquid product. But if you would like to know the gamma flip line for NQ, I can tell you. I think it's 20,036 is the gamma flip line for NQ. You can look up the gamma flip line for pretty much any product that has options. I personally, though, when it comes to like importance, like what do dealers, market makers use, like what do dealers use for hedging, right? That's the S&P 500. So personally, I pay attention to that gamma flip line over everything, but some people like to look at the other flip lines too, just to give an idea, a sense of when they're in positive, negative gamma territory. And if it works for them, it works for them. If it, cool. Okay, do you see a bull flag in XOM? I'll pull up XOM. I like some energy names. And yeah, I do. I would say that this is a bull flag. Yeah, for sure. Yeah, bull flag. Boom, here's the flag. And price is actually kind of pulling back into this prior area of supply. So this kind of zone here. So, I mean, this could be a trade idea for sure. Bam. Now, would I enter right here, right now? Probably not. So what I would do personally is I would look for strength. So I'd go to the 5-day moving average, and I would say that if price can get back up through the 5-day moving average and maybe through this level here of 121, this kind of zone here, and show us a higher low, which is kind of could be doing right here, and then a higher high, then I would say that could be something to initiate into. Because if I look at this right now, it could also potentially break back down to the 50-day. And it would still technically be in a bull flag structure at that time. But I would prefer to see some sort of strength through this kind of consolidation period, right? So instead to see that break out. But yeah, good call out there. That's for sure. Good call. In the structure here is more important. Like you can call it whatever you want, but you definitely see price actions coiling up. So you're on the right path there because we're probably going to see a move of some magnitude in the very near future, right? Markets and all patterns to some extent move between periods of expansion and contraction. So you get your expansionary move. Now you're getting a contractionary move where price action is getting rather tight. So what happens next? Well, we're going to see an expansionary move or an expansion in volatility, right? That's what assets do. That's what markets do. So yeah, in the near future, I'd be watching this one for sure. Especially like seeing inflation kind of, uptick. If that is the case, we're going to probably see oil increase in price, right? If oil increases in price, there's a high correlation there to energy names. So if oil sees a rise, that's probably going to benefit energy companies. Go figure. Okay, let's take a look here at SPY again. We're just doodling in the zone. Let's see what else here. NVO and PayPal, Tesla, SoFi. So NVO, is that Novo Nordisk? Novo Nordisk? Not really interested down in these levels for Novo, NVO. You got these averages that are all declining. The 20-day is pretty aggressive. The 50 days down. Can we see a snapback up? But even if so, it would be coming into declining and then also a flattening 200-day. And you have earnings around the corner. So in the near term, I mean, you have a potential positive divergence being built out. So if we get a press high, a lower, and then we have a little positive divergence, perhaps that opens the door for a little double bottom and bounce back up. but it's not actionable for me right at this current moment. Also below a declining 5-day moving average. So you're going to see upticks and downticks through this. But as far as a setup for me specifically, on my style of trade, I don't see a setup or a trade idea currently. Where I can just be like, oh yeah, I'm going to enter here, and then where will my stop go? Right here? Maybe. And then where would my target be? Up here? Okay, so that means my risk right here, my reward right here. It makes sense from risk to reward. You just got to, you know, put the ideals in your favor, right? You'd be trading against the current, right? You'd be like, oh, I'm going long. Okay, well, going against the current. And if you were trying to like, well, what if I short it? Okay, well, then your stop would be up this high, and then your reward could be potentially breaking down here. Could be big, but also it already came from a large move, so you're already downstream quite a bit. So for me, it's I don't see a clear indication of a setup. And then earnings is around the corner too. So maybe perhaps after earnings comes, maybe we'll see some sort of setup there for Novo Nordisk. Blah, 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 blah. PayPal looks good. PayPal was looking good over here too, and right here. This was one that's been on the radar for a while. We've talked about it on many live streams dating back, walking through the structure of markets, how they move between stage 1, 2, 3, 4, and back to 1, right? You have the accumulation stage, a markup phase, distribution, and decline. And we were talking about how PayPal looks like it could be moving into the early stages of a markup phase through this area. And the reason why is if we go to the weekly time frame, you can see we went through a stage 2 markup, distribution, and this was clearly a decline. And then for a long time here, could potentially have been accumulation. And you started to see the 200-day and the 30-day start to turn up here. You started to see some strength, and now you see some consolidation. So I would prefer to see, obviously, price action consolidate a little bit more, these averages to catch back up. And I'd be watching that 50-day moving average or 10-week moving average. Now, earnings is around the corner. So we'll see what that brings. If we get some bullish price action on PayPal and it's all of a sudden boom and it establishes us a clear markup phase, I would be looking for the consolidations, and then I'd be playing the flags. Kind of like that, right? Or if it shoots up and then it comes back in, I'd be looking for the consolidations and playing like that. But I don't really like to initiate a new position because it's kind of binary. We can be like boom, or we can be boom, or we can be boom, boom, right? It can be all over the place. But what we do know as far as risk goes, earnings is, when is earnings? 10/29. So it's roughly a $7.50 expected move for PayPal from where we currently are. And that'll change, but $7.50. And we could be back down here, depending on where price is, or we can, be back up here around 90. But that's the current range. It'll adjust as we get closer to earnings, but that's the implied move from earnings for just a one standard deviation, right? Chances are we'll tag it, exceed it, right? We'll be at one of those levels. Netflix reported earnings, right? And they did. Netflix saw a nice big move. This was the earnings expected move. We tagged it in during the earnings report. And then the market liked what it sees. We expanded through it. So now it's pulling in a little bit. So this is what I mean by how you can potentially trade consolidations. So you get this big bullish move, you got some follow through, and now it's consolidating. So what happens if, we start to go like this and pull maybe back over here? And it's just a nice, look how volume's drying up. Look how price action's coming in. So I'd be looking down at actually around these areas. And if it comes into these areas and we start to see strength, maybe we get like one of those hammer candles where it's like it flushes down and then recovers. Then you play boom back up through to 773 and potentially even higher. This happens all the time on earnings. Where did I leave I left my water in the other room. That's what I went to go fill up. Got distracted. Tesla. Oh, it's earnings today. Tesla earnings. All right, so let's take a look. So it doesn't matter what the chart looks like right now because earnings is what matters. $16 expected move for Tesla in this current moment. It's about a $7 implied move, 7.5%. So we can be right back up here to fill this gap or close to it, at least in this current moment, or right back down here to the 200-day moving average. So there's Tesla. I didn't realize that it was earnings today. What else do we got on deck for earnings? What is today's Wednesday? LRCX, IBM, Las Vegas Sands. I'm actually interested in Las Vegas Sands because that was setting up pretty nicely. Look at this. Saw some nice strength here leading into earnings. Wonder what, like, are they like have exposure to China? I mean, it's Las Vegas, but do they have anything? Because it just looks like a China equity, like how it just like ripped up, you know? And now it's getting very, very tight right here. So earnings on Las Vegas Sands, about $3, so 2.9. So we're looking roughly back up at around 54, 55, or down here at about 48, 49 for a one standard deviation move. Oh, shoot, I'm in my, I forgot I'm in my Tesla. Yeah, I did pull up Boeing earlier. It had earnings. It's out of the way. It doesn't look like it was good. I mean, when does it look good? But at least it's out of the way now, and it hasn't really moved much. It's down 2% on the day. It hasn't hit an implied move. It was roughly $9 implied move. We're well off of that and to the upside and to the downside. So we're holding the 20-day, and we're holding this little breakout area. But the market's not liking what it's seeing currently after earnings. So we'll see if we can manage and hold it, but right now it's getting back below the 5-day moving average. Not by much. It's still inclined. It's yellow, so it's more cautionary. If we start breaking down, I'd be looking at 150. 149, 150 as a potential level to come down to if it were to break down there. TMF is running, so TLT, yeah. I mean, I'm not surprised, right? TLT, it's down on the day, but these things were pretty extended, right? These things were pretty extended to the downside, and yeah, we did talk about that one a little bit earlier. But yeah, if you look at TNX CGI, right, it's up on the day, but it's coming off a little bit. But if you look at the daily time frame, yeah, it's frothy. So to see this come in a little bit and see a pop in like bonds, that does make sense. And that's why we were talking about also, like, I think that's when we were talking about solar products, how they fell down while, bond yields started, or yields started rising. And how they can also potentially correlate in that type of way. But I would, potentially watch for like a little move in bonds. Let's take a look at the S&P 500 now. It's roughly at lows of the day, about 75 basis points. We just hit new lows not too long ago. And we have yet to tag the weekly expected move. So still, I'd be looking down here as potential for the market to come down into. We haven't touched the weekly expected move for quite some time. Now, if we come down here, I don't know if it's going to be today, tomorrow, whatever the case is, but we're still above a quarter to date anchored volume weighted average price. So we're below a declining 5-day, or we're below a 5-day moving average. It's not declining really quite yet. Okay. That's one. And then we are in negative gamma territory where you can see wild swings to the downside and upside. This is where selling begets selling, buying begets buying. As far as 0-date levels go, once again, for just today, not much going on other than 58.35. There was some growth here at 58.25. But the main concentration is up here at 58.35. Market net flow. Still bearish. It's been bearish pretty much all day. It's been telling you just don't buy the dip. Don't bother with it. Little pockets here and there where it says you might see a counter trend move, but still to right now it says don't bother. So the reading that I'm getting here is one, you don't want to fight market net flow, right? You don't want to fight it. But two, 0 to 8 is telling us like, yeah, you know, we're selling off a little bit here, but we don't know where to go. So if the market gives up, it's selling, we can see an easy snap back to these levels that are higher. All right. So the flow is to the downside. Where that is really uncertain. So my only target there would be that lower weekly expected move, which is, you know, that's a couple bucks lower in the SPY. That'd be a pretty big move. Pretty big move. Especially that we're already down, you know, 77 basis points. Okay. I did talk about T already. Why don't I do streams more often? I might. You never know. I did talk about TLT there. LKNCY. That Luckin Coffee. So this is in the OTC market. Earnings is around the corner, so I don't really mess with that. But yeah, this one's also flagging out like a lot of China equities. A lot of Chinese equities are doing this. Or it's like DIY. I still think DIY should be in the, I still feel like, ignore these, like, I don't know why these, like, they droop out these, like, wicks. Those wicks they're not supposed to be there. But this one's also nice consolidation here, right at about this 5. We were looking at it right down here. And I was looking at it over here, and I played it up to here. And then I didn't trade it over here. I still feel like this is a name that's, like, could be into a markup phase. So do you see here how it's like kind of run into this $5 level? And the so we went into the decline, right? DIY when it came out. This could be stage 1 accumulation, and we could be going into a markup phase. And I honestly, I truly think that this type of a company will be trading back on the NASDAQ. Now, there was like accounting problem, like accounting things and fraud or whatever, and this is what ripped it to the OTC markets. It was during the buzz of 2021 where everyone was like, right when it came out, it's going to $90 and all this crud. And I was out there publicly on Twitter or on TikTok, like telling everyone that they're crazy to not get sucked into this hype. Now they don't know about the company. They probably don't even know it's on the OTC market. They probably forgot about it. And now I'm looking at it because everyone's not talking about it and saying, well, we're building higher lows. We're back above these averages. It wore people out. And yeah, I mean, it has the potential to do some big stuff. It's a gigantic company. This is the Uber of China. Okay? Okay. So I don't know. This name to me is like one of those, I feel like this is probably like an investment type of name. Like have a couple % of the portfolio and then just like let it go. Who knows? Because, you know, if it turns into a 10 bagger and you only put 1% of your portfolio in, that's a big. But if you lose 1% of your portfolio on it, like then it don't really matter. Tesla up or down 6% after earnings. I don't know. No idea. It's a binary event. We'll see what the market does. I don't really waste, like if I trade earnings, I'm buying like a share. Like I really don't care. Unless if I'm in the position, I still don't care. But the only reason why I'd be in the position is because I'm up in the position and I'd be okay with losing whatever that expected move is as far as risk goes on that current position, right? So if I'm like in the position right now and I'm like, yeah, I don't care if it goes down 16 bucks or whatever that is, that implied move is, I'd be like, all right, whatever. But if it goes up, I'd also, you know, be like, fine with that too. But overall, I mean, Tesla has not really gone anywhere. We've been seeing some squeezes, so it's a good company to trade like expansions, right? So like, for example, over here, like I think I made a video over here, a YouTube short of it over here. Then I re-talked about it over here, probably in trade ideas. And now I really haven't talked about it. Oh, no, 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 no. I did talk about it. I talked about it. Where did I talk about it? I talked about it over here, I think. Or no. I talked about it over here, how it broke out and then we back tested. And then I started looking at it over here again too, where it started tightening up. So right now, one, its earnings is around the corner. It's in a bearish context because we drooped down. So, and this was after the We Robot thing. Yeah, I'm not interested right now. I would just wait for earnings to pass. I really, give me a coin, I'll flip it, you know? Really don't know. Apple just tagged the lower weekly expected move. Apple chart looks good. It really does. And you're saying that it just tagged its weekly lower expected move. Let's take a look. The lower weekly expected move for Apple, 229.87. So I'm going to go ahead and draw a line here. Edit properties. We'll go 229.87. And there you go. It's not quite, I didn't quite tag it, which is fine. It's basically there, and it's pretty extended on the 15-minute time frame. So yeah, I mean, it's definitely possible. I mean, the pressure's to the downside, so I would be looking for the undercut here. I would just wait. Let's take a look at SPY. SPY is pretty much at lows of the day still. Let's do this. Check this out. So we'll go into vol bands. This is another indicator that I shared. I'll apply it. And the vol bands for the day for Apple, it's actually, the implied move was 1.2%. So you can see that we are outside of its current vol band. So Apple, AAPL, its implied move based off of VX, based off of its volatility product, which is VX APL, I think it is. It gives us an implied move. And we're currently outside of that one standard deviation move. So if we do come into this lower weekly expected move down here, and we've already kind of extended past this, yeah, it's a little extended in my opinion, so you could probably see some sort of a bounce in the near future. For sure. I would like to see it go a little bit lower. Don't know if we're going to get that, but S&P 500 is sitting roughly there at the lows of the day. Let's take a look at some of the other big names. We'll take a look at Google. Google looks really good. I think it's really setting up here for something. You can see right at about this area. I'll draw a line more specifically right around. Let me just draw the line out here. So I posted this in Trade Ideas today, just kind of restructuring what the risk to reward looks like on a breakout. But you kind of see we're building this inverse head and shoulders. We have an inclining 200-day, the 50 days flattening out, and we're still above it. So if we start breaking above this periodic, consolidation, and maybe, get up through here, this 170, a measured move would be from this low to this high. You measure this up, and that would really kind of take us back to and around these all-time highs on Google. So it looks good. Earnings also around the corner here, so be aware of that. But if we do break out and this starts turning back up, and the 200-day still goes, I mean, this could be setting up for a move. And, if the S&P 500 is going to get to 6,000, you're going to see these big market cap names probably help it out too, right? Now, if earnings comes out and we break down, then you just let it go, right? You just let it do its, you don't trade it. So if I go into Google and we put in the vol bands here too, Google vol bands, so you can see Google has a implied move today of 1.2%. Oh, sorry. My bad. You know what? I messed up. My bad. I want to go back to Apple now to recorrect that. Let's go back to Apple. I forgot. It's automatic on my trading view indicator, but I have to manually adjust it here. So now the implied move is adjusted. It is a 1.81% implied move. So this was the lower 1 standard deviation move for Apple. My apologies. On TradingView, I made that automated. And now we're coming into the lower weekly expected move here. We're right there, okay? So there's that. And then Google, I'd have to go back and I'd have to go to settings, studies, settings, and then change it over to Google. There we go. So the implied move there was 2.36%, and we have not yet tagged that. So if Google comes in, that would be the lower level there. $1.6138, the lower implied move for the day. Okay. Don't see my Discord anywhere. Oh, sorry, Joshua. If you're looking for the Discord, I actually I go through Patreon. So it's there. It's Patreon. You sign up for Patreon, and if you do the right tier, the $9 one, you get access to the Discord. The reason I go through Patreon is because I don't deal with any billing things. I don't do any of that. And Patreon takes care of it all for me. And then they also do the automation of getting you into the channels once you sync it up. So if you sign up for the Patreon tier that I have that says the Discord, and you sync your Discord to Patreon, you get access into the channels. That's where all the stuff is that I post. I barely post anything on Patreon. So it's all posted in the Discord. I give all that stuff that's listed there. Okay. Thoughts on CELH? I don't really have much thoughts on CELH. Let me activate this. Maybe you might find some, remove some of this stuff. It's coming in to fill a potential gap fill, right down in here. So, maybe we can find some support here. We saw a little bit of a bounce up, but it's in a downtrend. And let me be completely upfront here. Like, a lot of people, when they buy crap that has been in this monster downtrend, I don't know what it is about the need to try to catch bottoms. Like, if you were a short-term trader, okay, I get it. But if you actually think it's going to correct all the way back up to all-time highs after a move like this, look at the past of names that gone through this stuff. It's not the case. These downtrends, you'll see periods of excitement followed by continuations to the downside. I mean, you don't need to go far. Look at BABA, all right? Go to the weekly time frame. Every person was trying to catch every single bottom in BABA, but it wore you out. It literally went sideways for years, and now we're starting to see some strength pulling back into a 50-day moving average. And now people are probably so worn out, they might overlook it, yeah, it's probably going to do the same thing, and then that's when it probably moves. So it can really, really take time for things like Celsius to try to make a comeback. But I mean, look at it. It's down from $100 down to 30. It's going to require institutions to feel comfortable putting money back into risk in these names, right? That's what's going to change it. So you can either be that person that tries to front run an institution or hedge fund, or you wait for things to change over time if you're trying to do longer term. Now, if you're just trying to trade it, I mean, yeah, the trade set up here and there, right? So we saw this little pop up, kind of consolidated sideways, but it was also, you're going up against a declining 50-day moving average. So are you shocked that it broke down here? I'm not, right? That's very typical, right? If you're stacking ideals in your favor, I'm looking at a bullish setup and you got bullish stuff and then you got bearish stuff here. Okay. You're like, oh, the consolidation is bullish. Okay. But it's also in bearish context and it's a bearish trend overall, right? What was the catalyst for this move right here? Who knows? Was there anything fundamentally amazing about it? Probably not. So as we're coming back into here, maybe perhaps you look at these gaps, like, because sometimes gaps can act as potential areas of interest, potential support, potential resistance. We come back in, comes back, and then, doodles around and sets back up. Maybe that sets up for something. And then you like, okay, if risk gets tight again, you can play it, and you can have a tight risk to potential nice reward back up to here. Now, this little trade right there, if that's the case, there would be your reward. This would be your risk. That's a 2-for-1. And now all of a sudden it's making a little bit more sense. But right now you're below a declining 5-day moving average. All right. It was the same thing with SMCI. Look at SMCI. Right? Started wedging out right here. It looked pretty good. But what's the overall trend telling you? It's actually not that bad of a trend. The 200-day is still sloping up. The 50-day started flattening out. So this one probably set up a little bit better. But it started breaking down. And now it's holding this 20-day right here. It's kind of going sideways. So I would say you have better opportunity if this starts breaking through pretty much 50. And this starts turning back up. So it takes time for these things to heal. There's all kinds of issues here too with the fraud or whatever the hell it was. It really forces price down. SMCI. So Celsius popped there because of Pepsi. Okay, cool. Thanks for the heads up there. Okay. Let me check here. Checking Twit. There we go. Big red candles on Apple right now. Yeah, Apple's down to its implied move, by the way. There you go. That was that implied. Oh, wait, no, sorry. Let me make sure it's back on the right one. That's on Google. Go back to Apple. There we go. It's under, obviously, its implied move. And then the weekly move was right here. iPhone 16 orders cut by around 10 million units. You know what's funny is my wife, we ordered her the new iPhone because hers is really old and we were ready to upgrade it. We ordered it like over a month ago and we still haven't got it. It's not like it was just a regular base model of 256, the Max or whatever. Still haven't received it. Haven't even shipped yet. It actually boggles my mind a little bit. Yeah, I probably have to just call and be like, what's going on here? Because I feel like if I go to a store, they probably have them in inventory. I could just call. I know like everyone that works there still. I just don't bother them with that stuff. All right, S&P 500 still coming off here. I'd still be watching that lower weekly expected move. Lower quarterly move right there, or quarterly anchor VWAP, volume weighted average price. Coming off lows. Market net flow still remains to be bearish. We're below the gamma flip line. This we're selling but gets selling, buying but gets buying. 57.50 earlier today, we said if we do start cracking these, not necessarily today, but we do start cracking these, which we are right now, from a net gamma perspective, 57.50 was kind of the really only area that there was focus on down here after getting under 58.50. A little bit over here at 58.25, but yeah, we're under that 58.25 too. Boo-doo-doo-doo-doo-doo. So Apple's at its weekly expected move. Where's Googly at? Googaloo. And we'll take a look at a couple more. Actually, I might actually just use, I'm going to use it on TradingView. All right, so Q's is almost at its lower implied move for the day. All right, so we have Microsoft. Let's take a look at Microsoft. 5-minute time frames. Oh, we don't have fall bands for that? I thought we did. What do we have them set up for? Apple, Microsoft. Go into the... no, Apple, Google, Amazon. Okay. Okay. Amazon has of all product. Not too far off of that one, too. 185-ish. Apple, like I already stated, is underneath it. Googly boogly. Google's seeing a little bit of a bounce here. Nothing big. I think the bigger one to watch would be Qs. Which I am bullish Qs. So some opportunities if they start arriving in Qs, I'd be bullish Qs. S&P 500. The implied move for the based off of the VIX is up down in there at 576, and weekly expected move is still a little bit lower. It's not really aggressive sell side activity here, people. Just like taking a breather sort of thing. I mean, just look at just look at the orders today. Like for 0 day, there's nothing going on. Really, there's nothing going on here. It's not a crazy day here in this. Just the flow's been negative all day. Could be the market just waiting it out for these bigger implied moves of these earnings. We have Tesla right after the close. Tomorrow we get American Airlines, we get UPS, Southwest. Nothing really too crazy here. Deckers. I know there was concerns about Decker's Hoka brand. It's coming off a little bit. Coming actually down into this area. Did look really good here breaking out, but it's kind of reversing itself. NVIDIA. Yeah, I forget which video it was, but we talked about NVIDIA and other semiconductors when it was breaking out of this contraction pattern over here. So whatever date 924, 923 was, we talked about it. And broke out, back tested perfectly, and then we saw a big move to new highs. So it's bullish. If you're in it, awesome. If you're not, wouldn't really look to enter here specifically. I would be looking for more of a consolidation, you know, and then set back up and then maybe something. Let's get that 5-day. Let's get to the weekly expected move. It's been 4 weeks. Can I take a look at now? Yeah, is now reporting? 2. Oh yeah, now's reporting, huh? So now it's about a $55 expected move, 55 and some change. So 848, I'm just gonna round it to 850. And obviously this isn't exact. But you're looking at a 1 standard deviation range of this right here. Okay, so this is now. Up to and around 960 or down here to and around 850 on earnings. Okay, that's 1 standard deviation, what the market's pricing in as far as risk goes for now. S&P 500 still dragging a little lower outside of its daily expected move. I would love to see a flush, right? Like I would just love to see a flush down here. Because I actually would probably do an intraday trade if that was the case. And I potentially would even hold it if it goes in my direction. Not the whole position, but a partial position. Here we go. Actually, we might be getting the flush. It actually might be happening right now. 577.52. I'm going to make sure here. Give me a second. Did I even have my weekly expected move right? 577.52. Why is this? My expected move is off. Son of a gun. 577.52. I was like, what is going on here? All right, we're there. We're now at the weekly expected move. Did I do this wrong? 591.66. So my expected move for weekly was off? That's weird. Okay, 577.52 is the lower weekly. So we're there. Almost. So give me a second because I honestly might just be looking to do a partial undercut type of trade here. Let me go to Qs. Qs is coming in. See if I can set this up. Okay. Yeah, and we just undercut the implied move for the Qs. So the market had an implied move of 1.47% based off the volatility, and we're currently outside of that. This is where things could get a little bit more interesting for my perspective of playing like little bounces and stuff from an intraday perspective. Let's see if I can get in here. Let me check a couple other things. We could zero date. It's been a while since I got to put on just an intraday trade. 58.35. Still not much reaching down there. Oh, flush a little bit more for me. Come on. I would like a little bit stronger of a flush, unfortunately. So if anything, I would say maybe Qs would be the way. Qs is actually trading at the quarter to date anchored volume weighted average price. That one has not touched its weekly expected move yet. 486.46. Oh, man. So we're trading right there at the Qs quarter to date anchored volume weighted average price. And the implied move. Okay. I don't think I'm going to be able to enter. I feel like it's going to probably bounce. I feel like it's going to do its little bounce here. Doesn't mean it's going to bounce and go all the way back up, by the way. It would have been more of just an intraday trade. I would have preferred just a little bit stronger of a flush. But you can't always get what you want. No, you can't. But you can try sometimes. See if price settles in a little bit. Market net flow, still very bearish. If we bounce back up, I'd be looking probably roughly at about 580 on SPY. Okay. Is my sound down? Test, 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 test. Can anybody hear me talking or no? Oh, you can hear fine? Okay, yeah, I don't know. No, I do not want to open that. Give me a second here. All right, y'all. While this is trading, so we had the Qs form a little 5-minute hammer candle here, right at its implied move. Like I said, I would prefer to see a little bit stronger of an undercut, but for those that didn't, that were quicker than me, congratulations for a little bounce. This is just intraday stuff. I'm trying to set some stuff up just in case if it resets back up. Okay. What's on my screen? It is currently the 5-minute time frame of Qs, and we're coming down to that implied move for the day. It's down 1.3%. The implied move was 1.45%. We did reach down there. Still can go further. The SPY came into roughly almost its lower weekly expected move. And keep in mind that it's very common for price to doodle around its weekly expected move once we get there, okay? That's always pretty common. Okay. So Qs, I'm interested more towards the Qs. Why? Because although we're below a declining 5-day moving average, well, it's actually kind of flat, but it is going to start calculating down. The RSI is a little extended, okay? We're outside of this little value line here on the volume shelf profile. And then on top of all of that, we're in an environment that the dollar's been flying north, right? The dollar's been, up and away. And this is probably going to come off at some point, which could very well help the markets. And then also the 10-year yield, right? The 10-year yield's been kind of on this rampant run up. And both of those combined, if they fall off a little bit, it could be beneficial for something like the Qs. Now, once again, market net flow is still bearish. So now it's more of a tactical approach to the markets. This is not a good sign. That's more bearish. But then you look over here at the 0 date once again, and there isn't really much going on out here other than this 58.35. So it's not like an A+ setup. But if you're trying to play extensions and you're trying to just like scalp, when we're outside of a deviation like that, and you start to see intraday setups like, okay, so we're down here. If it comes in and maybe we put in, a higher low, and then we start breaking out, maybe that opens the door to pop up, and you have, small risk to small, greater reward, right? Or if you play the undercut and you're playing back through, and you're like, I'm just going to hold on now to the end of the day, because maybe you say, well, we've already reached its implied move, volatilities came off, and now I just want to hold a small position to see if we, recoup some of that. And if I'll just exit at end of day. There's a lot of different ways you can approach this. If you're one of those people who just say, I'm going to hold till end of day sort of thing. And if it's up, maybe I'll scale some off and then hold up a little bit of a remainder. But just know that if it starts breaking further down through some of these main levels, you got to be okay. Like you got to think your risk through, right? You don't want to take a huge position and it goes down another %. Right? That's too crazy. No, so the implied move indicator for Thinkorswim, they don't change constantly. So look at, so if I go into studies, I go to the vol bands, you pick which one you have on whatever for charts. So for Qs, I do the NASDAQ 100, I apply it, boom, okay. And it'll stay here like this, boom, boom. If yours is changing constantly, you may need to re-put it, like delete that study and re-add the study that I sent. I think, unless if I gave the wrong link, I don't think I did. How do I share it? Studies. No, I hit the vol bands. Share it. Here, give me a second. I'll share this one. Try that. Give that a shot. Hi, you're welcome. Let's see if it works. Okay, let me take a look at the chat here. See if I'm missing anything. Go to our Twitch. Not much going on there. Gamma flip line for NQ. Yes, there is. The NQ flip line is 20,000 and some change. It's 20,046 right now. Okay. One second here. Google's kind of calming itself down here, putting in some higher lows. That one has not reached its lower vol band. Let me go back to NASDAQ 100. Yeah, I like, yeah, the Qs are popping a little bit here. So this is, so look at the structure from a smaller time frame. Remember, this is smaller, so it can change very quickly. But you see how we undercut this vol band? This was a level that was given to us yesterday based off of the close of the implied volatility of the NASDAQ 100, so the VXN. It doesn't mean that it can't undercut it, but we're just thinking in terms of probability. So if you think of this as one standard deviation, right, 68% of the time it closes within these areas. So if I go to the daily time frame, right, and if I apply the vol band study to the daily time frame, right, you'll see that the times that it's yellow, it closes outside of the bands. So the last time we actually closed outside of the bands was over here, and it basically closed on it. We undercut it and we came back to it. And the time before that was right here. So out of really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 24 trading days, only 2 times that we closed outside of the bands. And both times we exceeded it, but kind of came back towards it. Exceeded, came back towards it. So when we're coming here, that's why I'm saying, yeah, we're outside of the daily expected move. Then I look at some 0-day levels, and I'm just like, this I mean, this makes, I mean, from a probability perspective, I would have liked to see a flush lower. But from a probability perspective, these can be marking the lows or in and around the lows. Then you go into like a different indicator, like the RSI, and you look at the RSI, right? Oh, what do you know? It's a little oversold, a little positive divergence here. It's a little bit extended of a move. So nothing's certain, but you start stacking these things in your favor, and you're like, well, it actually kind of makes sense to potentially see some sort of a bounce. Sure. Why not, right? SPY, it didn't, I wish it would have undercut the weekly expected move on SPY. That kind of is annoying, but whatever. Where do I think the Qs go if the 10-year yield goes above 5%? Ugh, man, that's a long distance for the 10-year yield. That's a big move. Let me see here. Oh. Remove these vol bands, it's annoying. Oh, man. Well, I mean, let's take a look. We were there in 1020 of last year. And you know what's funny? Is what was the 10-year yield doing during this time last year? The same thing. It's 1023 right now. We moved up into 1023. 1023 was right here. It was literally right here. That marked it almost... Oh my gosh, that's hilarious. I'm so glad you brought this up. 1023 marked the high of the 10-year yield last year. That's kind of cool. I got to talk about that on the brief now. Because today is 1023. So what if today marks the high of the 10-year yield for the year? And the 10-year yield comes off. Well, let's take a look. What was 1023 on the Qs? Right here. 1023 on the Qs. Right there. So you get this little flush out, and that actually created this monster rally. So if you're saying like where can the Qs go if it was at 5%, well, the last time it was roughly at 5% was right here. That would be a big drop. Right? 1023. So the last time we were at 5%-ish, almost there. Like I said, it was at 360. Does that mean it's going to be the same situation? Probably not. But, I mean, that would be a big move in the 10-year yield, that's for sure. So maybe. So what would that be as far as in terms of a drop? 26%. At that point, what do you think the Fed's going to do? I mean, that's we're talking pandemic crash levels, right? The pandemic went down like 35, 37%. In 2008, the great financial crisis went down about 58%. In 2001, the dot-com bubble did about the same. So if we were to actually break down at those type of levels as we're uninverting these yield curves, what's the Fed going to do? Probably step in. That's a big move. Would it matter? I don't know. Because also, you know, they're trying to fight inflation, and inflation's upticking. So yeah, I don't really have an answer of where the markets can go. I can just tell you where it was before at the 10-year yield when it was at 5%. And the 10-year yield's been making a monster run. And once again, this is a seasonal thing, and people, I think, forget about that. October is a season of like spookiness, right? It's you typically get increased volatility in October. If you look back through the history of like the 10-year yield, you do typically get run-ups. It's funny that it marked the high on these days. Doesn't mean it's going to be the same thing, but you get these run-ups. Yeah. But here's the thing. If we are marking a top here in the 10-year yield and the dollar is going to come off too, which is just weird price action overall. Give me a second. I think someone just knocked on my door. Give me a second here. I don't know what that was. I don't know what that was. I forgot where I was talking. Okay. Yeah, Coco was going nuts. Okay. Let me check in here. Okay. Pizza's here. Still no let up over here, unfortunately. Trend still down. Q's right back now at the implied move. So maybe we get our flush here. Maybe we can get a little bit of a flush. Let's see here. I'm going to pull up SPY again. Still hasn't touched its weekly expected move. So perhaps like this is kind of what I'd want to see is SPY to come into here to set up maybe for some sort of a intraday trade. That's what I would prefer. We are below the gamma flip line. So if I go into the gamma levels, I'm going to go gamma levels. And then I want to make sure that it didn't update. 58.21. Yeah, it's the same thing. Yeah, gamma flip line is right here. So this is where selling bid gets selling, buying bid gets buying. So we've gotten to negative gamma territory. We're seeing it, a little bit of a flush, bigger candles, more volatility, right? The range of the candles are suddenly expanded. We didn't close there yet, but we are in negative gamma territory and we're below a 5-day moving average. So this is where I don't initiate new swing trades. I just manage what I currently have on, right? And if I start getting stopped out, that's the market telling me, chill, that's it. And we're keep in mind that the gamma flip line, it is a zone, right? There's going to be other services or whatever that structure, like do their mathematics for the gamma flip line, their total flip line. It could be potentially different by a little bit, but it gives you kind of a range, an idea of where the gamma flip line is. So my flip line right now is at 58.21, right? And that's going to update tomorrow, right? So technically, in this current moment, we're in negative gamma territory. If we go to the VIX, go intraday, right? You see volatility is upticking, right? A little bit of an uptick from let me turn this off. See volatility kind of upticking. When did we cross down through it? Let's go into like a 5-minute time frame. We started crossing through it in like 11:10 a.m. Pacific Standard Time. No, sorry, that's sorry, Eastern Standard Time. So 8:10 was right here, this candle, boink. So we started getting through negative gamma territory right around here, and since that point, volatility has increased. We'll see what happens if it closes there or if it doesn't. If we start getting some extreme sell side, 57.50. All right, 57.50 on SPX. As far as the SPY goes, I'd say underneath the weekly expected move, this kind of area here, this lower VIX daily implied move, and then the quarterly expected move. Be really nice to see a flush down there. I will execute if we see a big flush into some of those levels. October is spooky. They may be inside. Yeah, Sparks. There you go. Yeah, so Sparks noticed that too about the 10-year yield. Yeah, is the 10-year yield making a little bit of a run here? I'm just going to go to 10Y, 10-year Y. No, I forget the code. I'll just look at TNX CGI. It's kind of coming in a little bit. Oh, it's coming in. That's actually could be a good sign. Let's see what the dollar's doing. Fucking dollar, dude. Dollar's like a rocket. Okay, so earlier we talked about what I'd like to see for the Qs other than the flush, but I would like to see, obviously, you know, a higher low, and then it start to break the structure of a series of lower highs, right? Lower highs, lower lows. Then I would like to see the higher low and a higher high. So something like that to maybe potentially nail in some sort of a bottom. This is a 1 minute time frame, so take that with what you will. It's very micro. And you can see here we're just doodling right there on the implied move for the day still. Kind of its happy place, what the market priced in as far as risk. We got Tesla reporting after the bell. That can move the market, right? If the market doesn't like what it sees, Tesla's implied volatility is high, its market cap is high enough to actually move, you know, these products and affect various other names. Got the bond auction in a few minutes. That'll come out. Yep. I'll turn on the audio for that. $20-year. And then at 11, you have the beige book. So at 1 hour, you have the beige book. A few minutes, you have an auction. I don't think that the beige book's going to really cause too much commotion, like on the larger time frames. I think when it launches, you'll probably see an immediate reaction. But I don't expect really anything new in the beige book. You know, you can look into what the implied move is for the day still and what the market is pricing in as far as risk. So like the Qs still has about a 31% implied vol, so 2.34 expected move, which is pretty fairly good size. I mean, we're already hit at its lower implied move for the day, and it's still saying, hey, we're still pricing in $2 worth of risk, which is about 0.5% to the upside and another 0.5% or so to the downside. So that's what the market's saying right now as far as the implied volatility for the end of the day, which includes the risk of the beige book. Yeah, NVIDIA breaks down, that's going to really put pressure on the Qs. That's 100% true, because NVIDIA's market cap and implied vol is huge. And this thing has been kind of putting its lower highs, lower lows here in the recent trade. Like I said, we still haven't actually even tagged the weekly expected move on SPY, and we're off from the Qs too quite a bit still, right? So the Qs, one, we're below the quarter to day anchored volume weighted average price, but down here, would be an interesting level for something like the Qs. So like I said, I would prefer to see some sort of a flush of some sort for an intraday trade. And we may get it. We may. If we get a big flush in the SPX, look 50 points lower from where we currently are, that would be an interesting net gamma level. But just keep in mind, the market net flow is still bearish, right? So the flow, if you're trying to fight the dealers here, it's a hard game to win because you're fighting the current. And the current right now is to the downside. The only reason why I'm saying look for potential bounces in the near term is because when I look at 0-date levels, not much is going on over here. Now you're starting to see some growth here. 5670, 5765. It's about 40 points lower. 5800. That's kind of where we're at. All right, here comes. All right, let's see what the market does now. With the information from the bond auction. Yep, new low. Okay, let's take a look here. I want to take a look at bond. We'll look at TLT. Looks like it's getting a little bit of sell side. That means the 10-year yield is probably popping a little bit. A little bit. Not much of a reaction currently. The market's reacting a little bit more right now. Qs are outside of its implied move. SPY, let's see if we're down there yet. Almost there. We definitely tagged the weekly expected move for the SPY, so it's been 3 weeks or 4 weeks. We're there. Bottega Veneta, fancy, fancy. Okay, so yeah, we're down there at the weekly expected move. This is what the market priced in as far as risk for the entire week. We got 2 trading days left. A bigger flush, I'd still be looking at that implied move down here if it wants to reach down here. Very, very frequently, right, if we undercut these, you trade around the weekly expected move for the remainder of the week. You can see bounces up, sometimes pulls in, but we're below a 5-day moving average. We're in negative gamma territory. So from a swing trading perspective, in these conditions, all I do is manage my current positions, and that's it. That's all I do. I'll look to add if it's a really good setup, and if I do add exposure to my portfolio, it's going to be a smaller position than usual. And then I'll look to add back in exposure when the market starts to recover itself. The bad things can happen when you're under a gamma flip line. So I prefer to just wait it out. Now, from intraday trading, when you're in negative gamma territory from an intraday perspective, because volatility increases, you can do smaller positions and you can see wider swings from an intraday perspective. So typically when we're in these negative gamma territories, I look to do more day trading type stuff. If the trades show up. So for example, right now, I would like to see some sort of, a flush, like a little bit stronger than this. Personally, I know people that might just say, nah, just go for it. The Qs, for example, I would like to see them at the weekly expected move. If that was the case, kind of like undercutting through this level, which, you know, we'll see if it gets there, but that means the SPYs would be outside of it too. And to me, that would be a potential opportunity to play it back into and around the quarter to day anchored volume weighted average price from an intraday perspective. But we're in a zone, we're in a level here where it's probably trying to establish its low of the day. Should be nice. And then market net flow, you see the green line still kind of heading down, still very bearish market net flow. So this is any sort of bounce or something like that, you'll be fighting the market here. I want to see here if I see any sort of change taking place. 577. Go here. Let's go to SPY, go 577. I don't really care about that level too much, but 577 might be a level of interest there, I guess. Take a look at TLT here. TLT is just kind of chopping around here. I'm kind of interested actually. Let's look up the implied move for TLT. Let me clear the drawing set. There it goes. The implied move for TLT is still, it's still wide open. But can you not hear me? Is the audio out? Test, 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 test. 1, 2, 1, 2. No, it's showing that it's active. Don't the daily expected moves that were never touched add up to an even bigger move? They could. Like the weekly expected move, for example, like hasn't tagged for quite some time. But we're outside of the daily expected move right now. The daily expected move based off of the options market 0 date level. I'll talk louder. All right, let's see if we can get some sort of a flush here. Flush down here, flush down here. Patience, patience. Or potentially Q's lower weekly expected move down and over here. Yep, 2 sigmas out of the daily, but just be aware that the implied move based off of the volatility index, we're still within that range there. So the 0 date levels for the 1 day daily expected moves based off of the closer implied move, those are important, but it's just been interesting to watch how the spread between that and the VIX or whatever volatility product you're looking at, which makes sense to kind of explode through some of those levels at some point when we've been so contracted, right? We haven't really moved anywhere. Yeah, plus ultra trades there. I posted it in my Discord. So I don't know. TradingView hasn't reached back to me yet. I published it and it worked there for like the day, and then they pulled it for whatever reason. They didn't give me a specific reason. So I tried to reach out, they said. And then I just put it in Notepad. I posted the chart, I posted it into Google Docs, but every time I do that, it's like, oh, then the formatting's off for whatever reason. But if I put it into a TXT file, it works fine. So I did that, and it's in the Discord, and until TradingView lets me publish it again. Or you can just take the Google Doc that I posted on Twitter, and potentially put it in ChatGPT and be like, hey, format this code to work in TradingView. And then they'll like adjust it where you can just copy and paste it, and then it should be fine. So. All right. Come on now. All right, so now we're kind of getting, we're there. We're almost there. Okie dokie, artichoke. Almost approaching. Almost there. All right, we're getting the flush. We are getting the flush. Flush, 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 flush. A little bit more. A little bit more, a little bit more. All right, almost there. Now, careful just buying into this volatility, obviously. So this is where I go into the smaller time frames and see and look to see if there is any strength. If you do enter into amidst the volatility, make sure you're obviously managing position sizes like smaller. You don't need much. Bigger flushes can lead us to 57.50, right? There's not much going on here, and this is, remember, we're in negative gamma territory. This is where selling but get selling. This is where it happens, people. Market net flow is still incredibly bearish. So any trade should understand that, or any counter trend move you should be aware of that. Come on, push. I wish it would just extend through, just a little extension. Let me go to Qs. Almost there. Almost there. I think we're going for it. I think we're going for it. I think we're there. I think we're going to be doing it. I think we're doing it. Catching falling knives is fun. I don't know. I mean, if it works out for you. But I'm not ready to catch this knife yet. No, not me. No, thank you. Yeah, NQ is down at the lower weekly. Yep, makes sense. I'm watching Qs. Just so you know, Qs is a more liquid product. So I would prefer looking at Q's weekly expected move over NQ's. And one trick that you can do if you want the weekly expected move more accurate on NQ, look at the Q's weekly expected move and multiply it by 40. These moves make me think of rubber bands, right? A rubber band, like you stretch out a rubber band, it gets, so, extended, and you let go of it and it can snap back. I would prefer the rubber band to extend a little further here for a fade trade. Yeah, I don't know. I don't know if I'm going to get it. I don't know if I'm going to get it. And I'm okay with not getting it, by the way. I don't care. I don't need to trade right now. Right? So if I'm going to trade, I want my levels. I want to enter where I want to enter. That's my decision. I'm not going to let I'm not going to force my hand. We're close. I mean, we still might get there, but what matters is how price gets there. So if price all of a sudden digests right here and then comes down slowly here, then I'm not interested. Because now there's all this volatility or volume that's been traded here. And it's like I like this flush, but I would love just an extended, like a real big flush out, right? This is good for a 15-minute candle, right? The high to the low. So you'd think that it can extend further, and it may still. But that really does matter. How price gets to your level is very important. Like even when you're playing breakout trading, right? If the breakout level's up here, but the price goes straight up to it like this, and like, hey, we're breaking out. It's like, yeah, but we came from down here in one single shot. That's not the greatest way to enter. So, all right, let's take a look at SPY. SPY. We're just kind of floating in the middle here, but we are seeing this grow here, 57.65. That would be wild. Yeah, buckle up. And if this keeps on, spinning out of control, that could be the bigger flush. If I was looking for the Qs to bounce intraday, where would you look for the Qs to bounce intraday if we got one? Where would I look? Let me pull back up the Qs and get more specific. Nope. Mother of goodness. Give me a second. I would be looking for a U-turn on the weekly expected move. So 486.46 is where I would want not necessarily buy this level, but what I would prefer is an undercut and to buy the undercut. More specifically, buy the strength that turns back up from the undercut, right? So if it cuts through and you makes a little bit of a U-turn, I would like to see that bounce from there. Target to the upside, that would really just depend on. It would really depend on where the low is, right? So if it undercuts way down here and then starts moving up, it just depends on what price looks like at that point, right? Because if it undercut like this and I could buy through and the risk is going to be like this, I might just try to play it up, for a couple, R's, up, and then I probably reduce exposure from that point. Or I just go very small, right? I'd go small and be like, yeah, just hold it to the end of the day, right? And then I wouldn't really care because if it's really small, if it starts breaking down way further, it wouldn't make a big impact. But if it goes up, then I catch a little bit of relief on the portfolio on names that are down on the day, you know. This is what happens when you're in, I mean, how many times have we gone through this? When you're below a declining 5-day moving average or below a 5-day moving average, right? And then you're in negative gamma territory. This is where volatility picks up. This is where people, you know, start to panic, do crazy things. And from a swing trading perspective, if you're like in the zone, you know not to actually go too crazy. You know not to add. And you just manage what you currently have on. So like, for example, my portfolio will be down today if I load it up. Yeah, so it's down today. I have some positions on and I'm just literally, I'm not going to be adding anymore, right? So anything that gets stopped out, it is what it is. And then if things start to recover a little bit, I'll start adding back in. And if something really looks good, I'll take the trade, but it's going to be a smaller position in the midst of a negative gamma environment and also in below a 5-day moving average, because this is kind of stuff that happens, right? Under flip lines, you get crazy moves. All right, so here comes the Qs still coming in here. Oh wait, I wanted to see it from this perspective. We're almost at the weekly expected move for the Qs. SPY could be reaching down to the quarter-day anchored volume weighted average price. We're almost at the implied move for the day for SPY. Man, it would have been so nice to just get 2 candles just. Coming back up to the weekly expected move in the SPY makes a lot of sense. I would just prefer a little bit more of a cut. I don't think I'm going to get it. And I'm honestly getting tired. The longer I wait, the more I just don't want to even take the trade. So we'll see. Got to happen quick. All right, let's take a look at chat. Make sure everything's all good here. Tesla's still reporting after the bell. Yeah. Oh, you're just getting Shanks a million. You're funny. Do I see the 10-year yield continuing to rise? I mean, what I do find funny is that the top last year in the 10-year yield happened on this specific day too. I thought that was kind of funny. So we'll see if it's just a seasonality thing or not, or if inflation's coming roaring back. Gold is red on the day. About time. I mean, that needs to take a breather here eventually. IBKR disconnected you. Must be the bottom. Shit. All right, SPY is we're almost there. We're almost approaching it. Let's see if it gets there. And Qs, same thing. It's almost there to its weekly expected move. Somebody said, what level did they mention? 486. Yeah, 486. That'd be a good level. Kind of just a round number there. Down there, it'd be undercutting the weekly expected move there too, if you're trading intraday. And remember, if an intraday trade works out for you really well and you want to hold it, that's fine too. I'm okay with that kind of stuff too. If it really goes in my favor, but I wouldn't hold the entire position on an intraday trade if we're in this environment for me, because my intraday trades can be a little bit larger in size because they're typically quicker. And I don't want to hold that type of volatility overnight. So what I do is reduce it to what a smaller position would typically be, and then I would go from there. Hey, thanks, Shanks a million. I appreciate that, bud. I understand. It happens. Oh, I need some more water. All right, let's take a look at some of the other names. What's going on here in the world of S&P 100? Let's look at the larger market cap names. Okay. Berkshire's flat. So we got Apple that's down about 2.52%. Nvidia's down 4%. So this is obviously the market dragger over here. Kind of forming a bear flag. If this breaks down further, I mean, this can clearly just put some devastation to the market too. That's just, that's Nvidia's game. But really it's just pulling back from a all-time high. So one day separated. Microsoft is actually not doing too bad. It's only down 60 basis points on the day. And we broke back above some of these key averages the other day. So, I mean, this doesn't look, honestly, too bad, right? Microsoft does not look bad. Let me clear this drawing set. All right, so if we look at this, even a pullback into this kind of, you see how price action got pretty tight right here? So pull back into these levels, I mean, could present potentially opportunities to come in and then play back up. Google is down 1.67% on the trading session. I'm interested if it starts breaking above the high of today, back up through to 170. So I'd be looking for that. And then the main pivot would be up here north of 170 for this potential inverse head and shoulder to play out. But earnings is not too far away as it stands. Amazon, earnings around the corner too, and this is breaking down from this consolidation. So just taking a little bit of a breather here. So I'd be careful, cautious there. Meta also coming in, not too farly separated from its all-time highs. Tesla got after the bell earnings, so we just wait on those. And then we've already hit our weekly expected move. So probably, since we haven't hit a weekly expected move for a while, I would imagine people are like, oh, the bears are back. Oh, no, everything's going to fall apart. I don't know. With the 10-year yield, how high it is, and the dollar, how high it is, I feel like that's going to have to come in a little bit. And I feel like this could be just a quick bear trap. Bear trap, where the bulls come right back, per usual. But I'm not willing to bet on that until conditions change back to where I like them. So, narratives. Price action over narratives. You said got a call while at 138 on NVIDIA? That would be good. If NVIDIA can hold and maybe move up a little bit, that'll help with the market. Semiconductors down 1.64% on the day. Look at the market's coming in. Big deal. This is how I see it. I look at the market. We're 3 days separated from its all-time highs. We're coming back into a 20-day moving average. I want to show you this chart here too to give more context. This is when the Qs close outside of it. So the Qs are underneath that implied move. It's kind of cool. They turn yellow. Let me go to the daily time frame of SPY. Okay. So let me hide the vol bands. Okay. So these are the last 4 weekly expected moves, or 5. We didn't touch it. We didn't touch it. We didn't touch it. We didn't touch it. And now we're touching it. So there, it went 4 times. Okay. I have to look to see when the last time we went 4 times without touching, but what I can tell you this is 80% of the time, 75% of the time, all year last year, 75% of the time we tagged one of these expected moves. One of them, upper or lower. 80% of the time this year, which is probably a little lower now because we've had a couple weeks pass, this year we've tagged it. So it's very common to tag these weekly expected moves. Now, if price were to break through the weekly expected move and come down lower, we'd still be tagging, technically it would still be a higher low from this prior pullback. Now, what I do find interesting, and why on the market brief I said we're probably going to be tugging the weekly expected move very quickly this week, is because notice the expected move went down to $7. The one prior was 8. The one prior was 10, 9. This was 770, which was still higher. So volatility was elevated in the VIX. The shorter time frame volatility came in. So the spread between, looking out further, it grew. And that's what we're seeing on these daily, little implied moves that I share with you. But they just kind of, and we're in the heat of a typically seasonal, more volatile period. So to come tag it this week or swoosh down and flush some people out. So the market anticipated this much risk. Market be wrong if it comes down further. Market get scared, and then all of a sudden we start to see flush outs and things like that happen. Now, in April of the SPY, in April of 2023. Give me a second, right here. Right here, sorry, right here, I forget the exact date, but it went 3 weeks right around here without touching the weekly expected move. And what did we see? This week was the fourth week we went to tag it. So it undercut it, and then we saw this massive shot back up, and then it reversed completely. So all this buildup of open interest, when we didn't tag these expected moves, we saw a fake out, a boom, and then it faked out again, and then it went on a 10% rally to the upside. Then we had this big outside bar, and then we went down 10%. It reversed the entire move. Right? So the point of me showing you this is this type of stuff happens after not tagging these expected moves for a while. And that's kind of what we're seeing right here. Could be seeing a flush, quick flush, right? We didn't tag it for 4 weeks. Boom, we come out, gets people all scared. Maybe we rip back up and we come back down. We'll see. But in the heat of all of this, instead of worrying of what to do, you manage what you currently have on. And when market adjusts itself, when we go back into positive, gamma territory, when we're back above a rising 5-day moving average, you can then approach the markets. But this is what happens in negative gamma territory. You get selling into selling, buying into buying. I say this every single market brief. Volatility typically increases, right? At 11:10 Eastern Standard Time, we crossed through the gamma flip line. What was the VIX doing? Once again, I'll show you. That's 8:10 Eastern Standard Time, or for Pacific Standard Time. So right here, this candle, boom. Negative gamma territory we held. What's the VIX doing? Woohoo! Rising volatility. All right. Oh, are we getting that flush? Maybe we're getting that flush now. Let me take a look. No, we still haven't got it. Never mind. Not yet. I would have preferred a straight flush. I don't think I'm going to take the trade. It is what it is. Ooh. Just DCA VOOG. VOOG? Vanguard Growth. Yeah, or like a Fidelity contra fund. But that's investing, not swing trading. That's a way to invest. Like, so on my investments accounts, they're underperforming my swing trading accounts vastly, right? Swing trading account just this year is up over 40%. It's like 45 or 46%. Growth fund is doing pretty good. I mean, where are we at here? 28%, right? So and then the SPY, I don't know where the SPY is at. 21%. So swing trading, and then also it makes a big difference on down capture. So if the market wants to come off 10, 20%, my swing trading portfolio is not going to do that because of what I do as far as these environments, right? In these environments, I don't add a lot of exposure when we're below a declining 5-day moving average and when we're in negative gamma territory. I go into protection mode. And then I'll add more when that changes. All right, we're coming in here. Come on, just go to it. Holy moly. Let's make it. All right. We did tag the implied move for the VIX implied move. A little bit lower would be the quarter to day anchored volume weighted average price. That'd be the first tag since October 7th. So the implied move for the day based off of the VIX volatility index has been reached. Ooh. SPY is now back into the 20-day moving average too, by the way, which, you know, it's an inclining 20-day moving average. I don't necessarily say, yeah, initiate trades into moving averages by themselves, but it's good to know the direction of them. So the medium term or the shorter term, which is the 20-day, could be up. If I look at the 5-day though, I look at the direction of this one, and this one is now starting to calculate down. I will say though, it's fairly extended from an RSI perspective. %, and if I apply the vol bands, still seeing if we can get that flush, or actually almost there for the Qs. We are at the implied move. We're actually slightly under the implied move for the day on S&P 500. We actually haven't really closed outside of that for a while too. So we're finally seeing a little bit of volatility enter into the markets. No surprise when it's happening when we're under a gamma flip line. So if we get a little bit more over here down there, I think that'd be enough to establish the Qs to the lower weekly expected move, and we can maybe see what we kind of said could potentially happen here. Now, looking at this market net flow, it's still like super bearish. And sometimes these type of days you can close at the lows. That's just what it is. Market net flow. If you're trying to catch a knife, you're fighting dealers, and the dealers are clearly selling into selling right here. Okay. So we'll see. It looks like it's going to be tagging it and undercutting it here in the very near future. Can we take a look at oil? Yeah, we'll take a look at we'll pull up, I'll pull up CL. Crude oil is coming off quite a bit here, down 1.39% on the day. But it's really just trading inside of yesterday's candle. So it's an inside trading day. If I look at the 1 minute, I'll pull up the volatility for crude. This is based off of the OVX, and we didn't tag a implied move of oil. The oil implied move was 2.98%. So bond volatility, oil volatility is rather high, and right here, right now, it's like actually kind of looking like it's trying to break here on the shorter time frame structures. But I do want to continue to watch Qs to see if we can crack under this. Utilities. Let's take a look at the sectors. Yeah, utilities looks good. I mean, nothing wrong with utilities here. Risk off type trades have been working pretty good. Real estate's shopping around. XLP. Consumer staples is holding up rather well here too. It's kind of just consolidating here. It's under these averages, but it is getting pretty tight. We have an inside trading day, so even utilities could be something to potentially watch for a break back up. Let me save this. All right. All right, we're almost down there. Got the baby crying, yeah. Going crazy in the background. It's 10:43. It's time for his nappy. Probably going to be put down here in a moment. Implied move on Tesla. That was a big little 1 minute spike there on Tesla there. A little volume. When I look at the 1 minute candles, I like to look at the volume because you can see some big volume come in on these lower time frames. I don't really do too much from a trade perspective off those, but you can look at shorter term structures and stuff like that. The implied move for Tesla is $16.63. Yeah, so it's about this right now. I mean, it's going to obviously be different, but could be down around 195 up to here, 229. It depends on where price closes, right? Where price closes on this. All right, Qs should have flushed down to the weekly. No, it's still not there. Pretty close. And then this isn't coming off at all. Market net flow is still incredibly bearish too. That's the only reason why I'm just like, eh. Let me see if anything changed from 0 date on SPX. 58.65, 57.65. That would be pretty wild. That'd be a big day. No, I don't think it bottomed out yet. I mean, we literally just hit another low. So the bottom, I'd have to go into the smaller time frames and look for some higher highs and higher lows to really call that out. But I'm just kind of waiting to see what happens if we can undercut this weekly expected move on Qs. I would prefer seeing that. SPYs we did. SPYs were actually at the implied move right now. So for SPY, if I was going to trade intraday or want to like execute into it, I'd prefer to be down here like more towards the quarter to day anchored volume weighted average price, maybe a little upturn. And the problem here is I'm picking levels that I'm probably going to miss, right? They might not reach, but all that means to me is that I'm not taking a trade, which is totally fine, right? I don't really need to trade today because I'm in an environment where I just manage my current swing trading portfolio. The market looks like it's set up to do some sort of a pop back, and I'd like to catch it, especially being in negative gamma territory. You can see quick squeezes. Market net flow doesn't really suggest that, but that can change. And we still have a lot of focus there at 58.35. So I can see the case for playing a little bounce intraday moves, but I would just prefer my levels to be violated and then turn back up through, you know. And we're not like far. We're not far. It's like I would just prefer to see it undercut, and that's just my style of trade. Yeah, you just stay out of the way. Is there major support at 486? I mean, I don't know if there's major support at 486. I mean, I would have to look at the order book. You can definitely see that there's been prior price action, and that levels has acted as a level of importance, that's for sure. But even prior support and resistance, I mean, it could be, I would say, it's not necessarily where I do business at. I would prefer to see what price does after that. Because this matters. This does matter. Right? This entire day said chill, right? Red line above the green line, red line above the zero. Green line's been going down. It's been telling you all day not to fight this. So if you were to fight it, make sure you're very, very patient and waiting for some key levels. What key levels? Like I said, I like to see weekly expected moves, daily implied moves through the volatility index products, because we've already cut the shorter dated ones. And I would have preferred to see how price got there in a big solid flush. And unfortunately, it came down here, we bounced, then it faded, and now we're bouncing a little bit again. Take a look at net gamma. All right, look at the call wall. Call wall is at 6,000. So traders are still reaching out here. So to see this pullback in the markets and digest, where's it coming to? I don't know, 57.50. That's the current put wall right now. Maybe we can undercut this, come back up, flush some of the bulls out, recoup the gamma flip line, and go from there. But 6,000 still seems like it's where we're headed from the perspective of looking at this chart. It's where people are reaching out to. So I'm still kind of positive. I'd be I don't know. Like I said, I'd prefer to see the Qs flush here, but I can see why people would be executing into Qs pretty much right now at this moment. I can see the case for that. Because some people that might execute don't care if it goes down a little bit, but maybe swing traders that buy dips might be like, yeah, I'll execute into a move that's already exceeded its implied. It's now 1.8%. It's overall in a bullish trend. Like, people might look at that and be like, yeah, I'm executing into this, right? TMF is a bullish. I don't think it's necessarily bullish because it's been going down. Right? It's been going down, so I don't think it's necessarily bullish. Yeah, it doesn't look bullish. But it doesn't mean it can't have a bullish move here, right? So I think the 10-year yield is going to have to cool down at some point, right? So TLT is down, and then you could see it on the daily time frame. It's been coming off here too. So, I mean, I think that we can potentially see a bounce here in the near future. That's for sure. Especially if crude oil falls. Crude oil typically has can lead this, and it's down today, not by much. Actually, let's go back to that little structure here that we were talking about, this little flag here. It's been popping from that a little bit. Qs is almost down there. Oh my goodness. We've almost reached it. We've almost came down to the weekly expected move, ladies and gentlemen. Holy macaronis. Lamb expected move? What is lamb? Can't find the symbol. Can't find the symbol. There will always be a reach out to all-time highs. I mean, no. Not if you're down 10%. Oh, there we go. Then the structure is going to be changed dramatically then from that perspective. But yeah, I mean, the markets always typically go to, I mean, it's always been another all-time high. All right, so there's the Qs. So let's see if we can actually like kind of undercut it and flush it. But there is the expected move for the Qs. There we go. I've been waiting for that. So let's see here if we can go into the smaller time frames and see any structural changes here, like 1 minute, 2 minute, and kind of see how we doodle around. Oh, LRCX. Yeah, I can pull up LRCX. Oh, and then I want to look at SPY too, actually. Sorry, my bad. While this is kind of doing its thing, I do want to see SPY on the 15-minute time frame again. We're almost there to the quarter-to-day anchored volume weighted average price. We're outside of the daily implied move, and market net flow is still bearish, but the green line is starting to flatten out to curl a little bit here, and this is starting to come in a little bit. Okay. So this is getting near exactly what I wanted to see. Let's make it happen, Captain. Let's make it happen, Captain. Okay. So there was the undercut and then the back through. So at this particular point in time, I could see the case for initiating something small and then seeing what happens and maybe holding it till end of day. Market net flow is still, oh man, this is gross. SPX is in no man's land right now. I'm watching right now to see if we can come into this quarter-to-day anchored volume weighted average price. Come on, flush in there. Qs. Let's go, come on. Almost there. We are almost there. Oops. Go SPY. I'm zooming in here. Sorry, I'm getting quiet because I'm actually considering executing now. Getting the systems ready. the system still ready to rumble? I want to see actually where we're updated zone levels. It's still coming up. All right, come on. There we go. One little bit more. A little bit more. Or at least just see a little bit of a structure change. So this is pretty much at 575.85. So I want to go into the smaller time frames and now just kind of watch it. What did I say, 575.85? There we go. Q's definitely going to 482. When? But here's the thing. If you look at Q's and you say it's going to go 482, but will it hit 488 before 482? Oh, shabakoo. Yeah, Beige Book's about to come out here. 2 minutes. 2 minutes, Beige Book. Beige Book. Not yet. I'm not executing yet, but I was looking to see if we can, which we might be there now, because now I freaking just, give me a second. Yep, we're there. So I wanted to see the connect of the quarter day anchored volume weighted average price. We are there. We are outside of the implied move, outside of the weekly expected move. So yeah, I am looking for a move to the upside now. Unfortunately, Beige Book, it's happening 1 minute before this little thing comes out, and I don't think it's going to add too much volatility. Maybe an initial shock and reaction, but this is where it's so annoying. I swear, if it's not one thing, it's the next. But there was the tag of the quarter day anchored move or below the week to date. Yeah, coming back up into this weekly expected move, there's a high probability of that. Yeah, we got Beige Book here in a minute, less than a minute, 8 seconds, 7 seconds. So let's see what the initial reaction is to the Beige Book. The algos in the Beige Book. We'll see. I'm in a pineapple. Got to get the rocket ship ready. It needs fuel. Yeah, the Beige Book is really nothing. The market knows. There's nothing new in the Beige Book. It may have brought in some volatility, but break out of the pineapple. It's not ready yet. We're not seeing any sort of positive thing yet. So it's still a series of lower highs, lower lows. So I want to see something change, you know. If I'm executing into this crowd, I need to at least see something go in my favor. We've gotten to the levels that I want to see, and we've got there the way that I like to see them. right? So I feel like if you execute, yeah, you might be fine, but I'm just not willing to press the buttons if I don't see anything yet of as far as like price action proving itself. You know what I'm saying? Hope that makes sense. But you'll probably be fine for a bounce in Qs in by tomorrow or the next day. Let it go. Okay, so that's out now. We're still syncing off, so I'm not really too interested. We haven't seen any sort of reaction that's positive. Market net flow is still bearish. The big level, 57.50 down here, that would be a wipeout level. And then any 0-date levels, let's see if that's changed at all to get out of the pineapple. Whoa, 58.50. What is going on here? Weird. Okay. 57.82, 65, 750. Yeah, it's still pointing out there. Yeah, so the market, as far as more volatility goes, yeah, especially if we're in negative gamma, like that volatility does increase in negative gamma. Right, so when we're below the flip line, this is where selling begets selling, buying begets buying. Look, right, we've been talking about it. Boom, this is what happens. You're below a 5-day moving average, so the market's going to need to recover. Right now, I'm just looking to see if we can, if I can execute into a day trade. But we've gotten to my levels, but it just hasn't shown anything yet, right? So it's just kind of sinking through. So I'm not really interested until we see some sort of either wipeout flush where we see a big bar of volume come in, and or where we can see some higher lows, and we haven't seen that, or a higher high. We haven't seen that yet. So that is all. Yeah, that was kind of a nice move there. We're in a pineapple, people. I want to be in a rocket ship, but we're currently in a pineapple. So SPY is clearly undercutting the level of interest of this quarter-day anchored volume weighted average price. I still think that we're going to probably rip to retest this and come back up into here, but I'm just not bought from it for an intraday perspective right now. So I'm just managing my current swing trades that are on and then letting this just take place. This is where patience pays, right? If like I said, if If I don't, like, so I wanted my levels. They got to my levels. How did price get there? It got there pretty much the right way. Now I'm looking at the smaller time frames, right? Look at the smaller time frames. Is anything positive happening where I can actually execute into this? No, not yet, right? Could be getting a final flush out, but I still want to see some sort of structure change. We've been serious, just lower highs, lower lows. Oh my gosh, here we go. Down the trend. So sometimes just not executing makes sense. Sometimes it doesn't, because sometimes you get this rip your face off right to the backup and you're like, oh, I missed the move. But then again, who cares, right? There's going to be so many opportunities that show up. You don't need to catch every move. You'll realize that over time, it's actually better to not take the trades than it is to take the trades. Or it's better to take the trades when it actually makes sense to do so. And we might get there. We very well might get there still. But let the angry market get out its boohoos. Say the only good deal is bonds. Let's take a look at the yields actually right now. I want to see 10-year CGI. Coming off a little bit here, but rather high on the day, up 9.95%. Sheesh, man, that's such a big move. Let's take a look at the dollar. Has that been moving up here, cranking too? Dollar's actually near its upper band today for the zones. So this was yesterday, and this was the band for today. So it's near that upper level, but it's up. It's even higher today, so it's going to be extended now. When I post the zones, but also another incredible move in the dollar, and this is why I think that like today, like this is a day that you can look back on and be like, dang, I should have executed. Right. And the reason why I say that is because this, to me, it's like flushing and scaring some people. But if you look at like the intramarket assets, like I said, the dollar, 10-year yield and stuff, if these start coming off together, we've seen the market actually really do good in those environments. So if this is just a big bear trap, it wouldn't be necessarily funny, but it would be very obvious in hindsight. So SPY's still coming off, still no bid here, right? It's a bidless, the bidless little teddy bear over here. All right, Q's now down. Dang, Q's are almost at its lower range too. Whew. That changed fast. All right. Trying to see if I can find some sort of a trade here. I'm trying to just think of ways to potentially execute into it, because I do think that we're going to be getting a bounce here. I mean, I'm talking. I don't feel like it's going to be some crazy follow through. Like if we get a little bit down further, I still think that it's going to come back up within the next couple of days. So I'm seeing if there's anything that makes sense from just a risk to reward perspective, where I can initiate a smaller position if it made sense to. But right now, my head is leaning more towards the no aspect of it. You know what? I wanted to see this chart again. INCY. Somebody had mentioned LRCX. I want to see that. LRCX. Yeah, no, that's earnings. No, that's why they wanted it, because earnings is coming up. LRCX, for whoever asked about it, $5.20 expected move. It looked good over here, and then on this breakout. But once this type of stuff happens, I just ignore it. So you get stopped out here, or you get stopped out there, one of the two. Sell a put spread. Yeah, you can do controlled risk and stuff like that. That makes sense. Google and Microsoft are both faring somewhat well from a percentage down on the day, and they're still within their kind of consolidation, which I still like here. So Google's on my radar, Microsoft's on my radar for potential pullback in. Those two I like. Amazon, it is pulling into an inclining 50-day moving average, so this could be interesting to see how this plays out. Just watch the 5-day moving average. It's also getting rather frothy. Like it's kind of like algo selling sort of stuff right here, right? So when they give up, when they turn their sell signals, sell programs off, you can get these little snaps where potentially back up to the 5-day moving average, wherever that may be at that time. Okay. Well under the VIX daily implied move right now. And it's still pressing lower. So still lower highs, lower lows. Still not my cup of tea for an intraday trader fighting this trend tape. Still give it more time. LRSCX can bounce hard? Yeah, it might. I mean, everything can bounce hard, really. Especially when the market's in negative gamma or under the flip line. You can get massive rips. CXL. Oh yeah, good chart, XO. There you go. XO. I'll give grow more. I'll give you those levels in a second here. I have them marked out. We're below them. Why haven't you played the shorts? I'm just not interested in this current market. He's pointing out right here that if you connect these lower trend lines, price is pulling back into and around these levels. That's good. Yeah, good level to mark out because we saw big flushes into these before. Boom, and even a gap down like this. So that is a pretty clean looking level there. So somebody had asked Q's and SPY weekly move. So Q's is right here at 486. So we're down there now. We're underneath it. So it's been a while since we've tagged these expected moves. And then SPY's we're well below it right now. We're hitting new lows of the day. 577.52 for SPY. So these are cracking underneath it. I actually like that flush. I want to actually see here. We're north of that, this 57.50, man. If we can come down there, that'd be crazy. Today, if we got down here, I would actually probably just buy some just to buy some. Just to have a little bit. Even though it's below negative gamma and we're below the 5-day moving average, I would probably just look to add a little exposure in that level. Just to have it on just a quick probably. It'd be a smaller position given the context of the market, but I would probably add, buy a little bit there. We'll see. That'd be crazy. This is where big opportunities open up. This is what dreams are made of. Shoot. Would it be wise to go long here with Tesla reporting 2 hours? Well, it depends on your sizing of your position and stuff. Like for me, for example, when I say that I'd go long if we came into this area, Tesla can report and it could fall down 20%. It's even if the SPY fell down 5% overnight, my position size, it wouldn't be to the size where it actually hurt my portfolio that much. So I'm talking like just a piece of inventory sort of thing, like, and it would be smaller than my normal positions given the context of being underneath the flip line and underneath the 5-day moving average. You see what I'm saying? Let it work. Hit your level. I think we might go to 57.50. It's a very big possibility. Hey, this is what happens when you don't hit these expected moves for a while. Things wind up like crazy. The only thing risky about a trade that you take is its positioning size relative to your portfolio, right? You can take I can take the most riskiest trade, but I can take 25 basis points of my portfolio and put it in there, and then it's not risky, right? You tell me whatever the riskiest position is right now, and I could take that position, and my position size will be so small it's not risky to me. You see what I'm saying? How that works? Like if you trade XYZ. Right now, it's super risky to do so, right? Okay, well, if my position size is almost nothing, it's not risky. Because if it went down 100%, I'd be willing to lose XYZ in my portfolio, right? And the chances of it going down 100%, right, would be close to none, right? Unless if you know that the company's going to just evaporate its stock the next, I don't even know. Or it's like an option trade, I guess. No. I was going to get off a while ago, but man, this market volatility is just crazy. So I kind of want to watch it. Anything interesting in the last 10, 15? We're really just watching to see here if we can put in some higher highs or higher lows. And I said I'd probably initiate get some capital in actually at 57.50 if it really came down there. Are those charts any different, or is it just start of that phase? Oh, you're welcome, Blue. I'm not too sure I understand the question there. Look at market net flow. This is just bearish, man. These are the days that like you close at lows, man. It just kind of sucks. Nothing's changing here. It was adjusting a little bit how this flattened out, but started to go back down. Not the craziest volume in 0-day flow, though. Let me further out. I think it's time to go into a rocket ship. Let's change it up, guys. Let's go in a rocket ship. Let's change it up. Let's feel a little bit more confident here. Let's change the mood. Let's see. Okay, so what I'd be looking for, where would we rocket ship up to? If we start moving up, I would just be looking back up into this area. God. Don't make trade decisions based off of my vehicle of choice. Okay. There is no hidden message on my screen right now. I'm about to get out of my rocket ship just because everyone's saying that. Yeah, all funny. Okay. Let's go back to Gamma Labs. 765, 5750. That 5750 grew. Wow. 5750 is still fairly far below us. It really did grow. 55, so 576. So maybe go up $1 higher in the SPY. So maybe 40 cents. So 576, maybe that'd be back up to, yeah, it'd be back up into this range here. Remember, there can be short coverings, people. We are starting to see a little bit of a bounce. Cool. If we go into like the smaller time frame, see if anything's changed from there. Not really. So we're seeing a little bit of a reflexive bounce, but what we haven't seen is a higher low. Okay. Sorry to burst that bubble. But it's getting a little bit of a kind of a little bit of a rip back. So a higher low would be nice. Higher high. Come back up to the VIX move. If it just goes straight back up, I mean, those type of things happen too in this negative gamma environment, but yeah. Boom, ba-doom, ba-doom, boom, boom, boom. Pays to be patient today. Holy moly. Holy moly, guacamole. I'm sorry. The EM for Tesla. Yeah, so EM for Tesla. Tesla. It's roughly $16 and some change. At least it was $16.87. So it's about up to $230.50. To basically down to 197-ish, at least how it stands right now. You were talking about the yield curve inversion chart. Oh, the yield curve inversion. You said volatility will be back. I don't think I said that volatility will be back. What I said is, I mean, we could pull up the tweet. What did I say? I don't really know. I forget. I'm pretty sure that volatility typically comes back during those times. Like that's what we've seen in the past. Is it going to play out the same? We don't know, but it'll obviously be obvious in hindsight. But what I will say is that big volatility moves are going to happen when we're under the flip line, right? That's when volatility typically increases, when we're below that gamma flip line. And we're below there now, right? And what are you seeing volatility do today at 8:10 Pacific Standard Time? What did the VIX do at 8:10 when we crossed under the flip line? Right here. Right? Saw it spike up. It's not always the case, but that, you know, it's an important tool. So if you know that volatility has the potential to increase, you can reduce your sizes and positioning or reduce the amount of exposure you're going to be putting into your portfolio and wait until those conditions change again, right? We might, who knows, like we might be back above the gamma flip line come tomorrow, right? We no discussion. Still haven't really seen a higher low yet. It's just a little bit of a bounce. We've seen these bounces before. Except this bounce is happening underneath the weekly expected move. And right back at the quarter-day anchored volume weighted average price. And not only under the daily, having a multiple sigma move, but we're near the VIX implied move there too. So I guess the rocket ship is holding up for now. Doom, 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 doom. Okay, I'm gonna run to the bathroom and fill up again with some more water. I'll be back. Low on fuel. Yeah, I don't know about how high this rocket gonna go. It should be like a submarine just trying to get back above water, you know? Bounce off a daily 50. Doesn't seem to be bottoming on LQD, J and K, BXM. Yeah, what are those things doing today? HYG. Ain't doing anything. Ugh. The HYG is actually a little extended down here. Doesn't mean it can't go lower, but it is towards its lower zone, lower band. It did that before here too, and then we bounced. You know what I do find interesting is, yeah, bond market's been coming off like this, HYG, high yield. The exact opposite with the Qs. So to see this catch up, you know, does make sense, or consolidate. IWM saw a nice big run up, but I mean, go figure, right? It comes right back down to, you know, grays here. It's just in IWM's like mannerisms to do this crud. We close to a new yearly high. We're trying to break out. It comes back in, right? But we are still seeing higher lows here, and it's above a rising 50-day moving average. And I will pay attention. I'd say pay attention to the yields, because if these do start to back off at some point, maybe that does benefit some of that stuff. XRT was one that I was keeping my eye on for a breakout, and this one too. It's not there quite yet, but it's pulling back in, and it's still kind of going sideways, so a break through these levels could make sense. ARC was another one I had my eye on. This one's coming in today. Rather strong come in today, so this one will probably give some more time to see if it sets back up. Down 3.46% on the trading session today. Price action got pretty tight. It expanded, but volatility expanded to the downside. You could look at this and say maybe it's breaking down too, like this, right? So it contracted and then it broke down. Or you can have a stop here, and that looks like it'll probably come through that area, but we'll see. I have a position in ARC, and it maybe is stopped out. I don't know. Let me check. No, I'm not stopped out in ARC. I have a still a position on an ARC. You've been trading Boyle? I'll just look at net gas. Yeah. Or UNG. NG or UNG. Yeah, I know, yeah. They do definitely call it the Widowmaker. Hey, but it's you know. Oh, great. What's going on here? Give me a second. SPY's still kind of SPY's still seeing it's a little bit of its little bounce there. So I guess we're still I forgot that I'm in the rocket ship still. Good timing. Okay. Yeah, net gas. Where was I? It actually kind of looked good. Oh, it's actually moving right now. Hey, look at net gas. So UNG on the 5-day moving average, it's starting to curl around and it consolidated here. Now this is pretty volatile product. I mean, just down to here would be minus 2+%. But on the daily time frame, well, I like the candles of net gas better. NG, it looked better. But you can see that we had this outside day here, and then we have some inside days. You never know, and it's coming back into this prior area of support, so maybe that bounces a little bit. But yeah, you're right. It's definitely the Widowmaker for a reason. But you can make great money. You can lose great money, you know. You're in the honeymoon phase. That's actually pretty funny. You guys, that's too clever. It's called the Widowmaker, but it's doing really good for me. Oh, you're in the honeymoon phase. Shit. That's funny. Red Eyes is married, that's for sure. SE, let's take a look at SE. Yeah, SE's consolidating very nicely. You're right. It's moving sideways. Price action getting rather tight here too, so maybe a move through that 100, you know, a decisive move through this 100 can create a nice little pop. But yeah. I mean, you can't really say it's bad. When it's at all-time highs, basically, or not. I don't know if it's all-time highs. Sorry, my bad. Highs for the year. We did have a pretty big outside day this day, and these can mark potential turning points in the market, and it kind of did here, but it's really just going sideways. So, is that all we got for a dip or buying opportunity? I mean, I still think we can come back into the weekly expected move. I don't know if that's going to be there today. But remember, the higher probabilities that we come back in the weekly expected move. And maybe if we come back, maybe it acts as resistance and pushing us further. And then we try to snap back. There's so many different potential scenarios. But this was the U-turn that I was looking for. Like where we can undercut. Where was the Qs more specifically? I talked about the Qs. Let me go back to the Qs. So let me hide this. Alicia Lewis, thanks for subscribing to the YouTube channel. Sohail, thank you for subscribing to the YouTube channel about an hour ago there. Tor, thanks for subscribing. Waheed, thanks for subscribing. Vacation was good, XO. I just noticed that you subscribed to Prime for 2 more months. Thanks for that 4 hours ago. My bad. I haven't been catching everything. So Qs, this is kind of what I was looking for. Okay, right? There's a higher low, higher high. Boom. There, we came back in the weekly expected move. There's the turnaround. Right? Probably comes back here. Something like that. But I don't think it's over and done with. Like I said, if the 10-year yield and the dollar starts backing off, I think we'll look back at the Qs and be like, dang, that was a good opportunity, right? If you're looking at it intraday like I am right here, I think you're going to be whipped around a little bit. From this perspective, I mean, if you look at the Qs, we're just pulling back into these prior areas. So to even come back up to this quarter to day anchor volume weighted average price to test that, It makes sense. This is a pretty extended move. Comes back in, kind of up and around these areas. And if it really wants to get going, I mean, we've really kind of got to see some of this take place where this kind of backs off a little bit and the dollar backs off a little bit. And I think that that'll really add to maybe that Santa Claus type rally. In the current context, right? Once again, we're below the gamma flip line. So this is where selling but gets selling, buying but gets buying. This is where you get faked out, both sides, right? You get faked out. So yeah, I prefer being above a gamma flip line. I prefer being in a positive 5-day moving average, but we haven't closed under the gamma flip line on a daily basis yet. So honestly, I think it's anybody's game right now, and we've already tagged these lower moves. So I don't think you missed anything, right? If the market's going to recover, you didn't miss anything. If it goes down a little bit more, even comes down here at 481, but still comes to all-time highs here in the next week or two, or even Q4, like you didn't miss anything, right? So it comes back down to, like, in my opinion, it comes down to your position sizing, right? If you oversize the position and it drops, another % tomorrow, you'd be freaking out, right? On an oversized position. But if you're like, I'm going to put in a little bit of exposure here, even though that it's underneath these averages, the 5-day moving average, it's declining, and it's in the other gamma flip. But sometimes, right, you can get these rip your face off rallies back. So I want to put in a little bit. And if it drops to maybe this lower level, these are maybe your Q4 positions where you're looking to believe that it's going to be going up higher into Q4. Then you're really not and if you're wrong, just think about how much am I willing to be wrong on a position, right? -5%, -6%. And then you would back your risk into that and build into it. So when you're intraday trading and you have size on an intraday trade, it is very important to be accurate, right? But when you think out a little bit and you really think in terms of what does my portfolio need? Does it need a little exposure in Qs? Okay, this is an opportunity to add a little bit. And what happens if market goes down a little bit more? Oh, well, I guess that's okay because my portfolio needed some exposure and whatever. And just have an idea of where you'd be getting out of if it does go further against you, or how long you plan on kind of being around in the position. Because you can always look at different time frames to create, your structure. Okay, let's go to the weekly time frame for Qs, right? Let me go here. Boom, weekly. Boom, Qs. Okay, go Qs. Boom. Oh my gosh, it seems like so. I mean, look at the Qs is down right here, on the weekly time frame. Let's forget about this. Let's go to the weekly time frame and go right here. Oh my gosh, remember it was doing it right here, and then it bounced up, and then we saw volatility, and then it came back up. Right. So it's all about time frame. How much money do you make from Twitch and YouTube? My wife trades all day, and I think she should start a channel. Talk through her decision making. I'd say make a channel. You never know what can happen. I make nothing, pretty much nothing on YouTube. I make $1,000 a month, if that. And then Twitch is literally nothing. I don't even notice the checks come in from Twitch at all. But I don't have any viewers on Twitch. You can build it up. I mean, I have 10 viewers on there right now. When I first started, I started strictly with Twitch and signed a deal with Twitch because they got me to the live stream. So they brought me on for 3 months on Twitch, and that actually kind of kicked me off on live streams because I was too afraid to do it. Do I get anything from Amazon Prime subs? I do, I think. But the total that I'm getting from Twitch is I mean, I think my last payment was $50. You know what I'm saying? For a month. I'm not joking. And then the YouTube, right? I think my last payout on YouTube was $880 or something like that. Yeah. So some people get 30,000 views and 100, whatever, massive views every single day, and then they can make good. I think the most I got paid from YouTube on a month was $6,000, which was pretty freaking crazy, in my opinion. But I've never seen that ever again. There was one time, and the second highest was maybe 3,000. So, Dudes from Southern Oregon love the channel. Thanks, man. I appreciate that. We're talking, what are we talking Southern Oregon? Is that Redmond? No, that's, no. Wait, yeah, no. Redmond. Yeah, Redmond's Oregon, right? Southern Oregon. Or Roseburg? I used to have to go to Roseburg for work, like once a month, once a week. I actually enjoyed it in Roseburg. I liked the diners down there. But that wasn't that south, I don't think. That was, yeah. Had to go there. I had to go to Bend, Oregon, and I also had to go to Coos Bay. Do I have, how much did I have on the 6K month? In the month? So you can kind of do the math. You get paid like $10 every 1,000 views in the finance channel. Or, you know, maybe it's a little bit, it's kind of hit or miss. Maybe an average of like $8 to $10 per 1,000 views. Sly's asking about Discord. The Discord, I do have a free membership, and I'll post sometimes some midday market updates in there. I've been kind of on and off because of my, still getting used to having a child. It's new to me, and I've been on vacation. But I'll post some stuff in my free Patreon. As far as the paid Patreon / Discord, the stuff that I put in there is paid. It's not crazy. It's $9 a month, or you buy an entire year for $90. And I mean, you can just ask people in the comments. It's not an alert service. It's not like, you know, that. But I post my watch list, my tight list, all the tools that I use. You have the access to the trading ticks, daily expected moves, weekly expected moves, quarterly expected moves, monthly expected moves, some bots, the community. Oh. And then I have YouTube too, and I post videos there for all free and a lot of educational content there. So. Thanks, Inspire. Yeah, I would like to make more doing it, but I'm not, unfortunately. You know. I mean, that's why I started the Patreon, was to be able to do this full time, because I had to leave my work, my career at Verizon. I was making good money there, and I couldn't separate it. I couldn't do both. It became too hard, so I had to pick. So I picked this, and the only way that I was to be able to make that transition is by starting a Patreon. So I started a low cost with the hopes that it would overtake my income. It didn't, but it got close. You know, health insurance is expensive, especially when you're self-employed. It's crazy. It's like stupid. But I also built up a big nest egg from my corporate career, and a lot of savings. And I don't buy expensive things, so I mean, I could live on pretty much little amounts of money, and then we also have other business, right? So outside of this realm, right? So thanks, Nova. Thanks, Sly. Medford, thank you, Striker. Medford, that's what I was trying to think of. I was thinking Northern California is Redding, right? No, wait. Whatever, yeah, Medford is what I meant. Oh, Medford. They got an In-N-Out burger now. Hallelujah. Right? Did they? A while ago, actually, but I never heard that. Okay, let's take a look at the market. Sorry, I'm kind of getting off track here. Did see a little bit of a bounce back here in Qs, but once again, it's like how do you read this one? Like, it's just kind of like it's a straight line. We're back in the weekly expected move. No surprise there. Let's go over to Qs. Let's go over to SPY. Sorry. Merlin, thanks for subscribing to the channel. Subscriber to YouTube. Thanks for coming through. Trimming some from TQQQ. Nice trade, man. Nice trade, man. Very nice. The brokerage account is Interactive Brokers. I've been partnered with Interactive Brokers. I use their products. I use them, and I use Fidelity. But basically, if you go to that link, it's just going to bring up. And by the way, they don't. Even if you sign up, right? If you sign up, they don't give me like some sort of thing for you to sign up. They just pay. They just for me to have the link out there. That's how they compensate me, which I think is kind of cool. The Interactive Brokers link, if you were to open that up, it brings you to a landing page, and I'm going to bring it up actually because it is. Let me see if I can pull it up. Because there are some tools on here. If you want some free resources, Interactive Brokers actually have. How do I do this? Sorry, give me a second here. Okay, so it brings up this link, and it's just the brokerage account that I use for some swing trading, some day trading. But my main account is, I typically pay most attention to my larger accounts, which is in Fidelity right now. But I use these guys on a daily basis. But if you go into this link, there's a Learn More with IBKR Campus. And they actually have a bunch of free resources and stuff. So they have free courses. They got news stuff, which their news feed is pretty dang good. Quant stuff. They have a podcast. They have webinars. It's just overall good resources, and they've always been a big support of this my channel. So that's what that is. I haven't seen this for a while. Let's take a look here. What are we looking at? Is the market saying we're not getting a cut no mo? No, they're still saying a 25 basis point cut. Probabilities. The probabilities of only a 25 basis point cut till year end is increasing. And you can see the probabilities of a 50 basis point cut. Wait, am I doing? Yeah. So they're still pricing in about 50 basis points of cuts, which is interesting because if inflation is going to be increasing, is the Fed really going to continue to cut? If everything's so strong, like what would be the point? That doesn't make any sense. All right, where are we doing on the SPY? SPY is back up to the lower weekly expected move, right at around there. Are we surprised, ladies and gentlemen? Are we still in the rocket ship? My apologies. Or maybe it's a good thing. Should I get out of the rocket ship or should I stay in? Fidelity got hacked. Well, that's not fun. I didn't know. I wasn't affected from my understanding. Everything's fine on my end. I change my password pretty darn frequently, so I don't think that would be an issue. Oh, Fidelity interface. Yeah, it's not great. Yeah, that's for sure. No, it's not great. No argument there. Interactive Brokers, it's a little complex, their platforms, but they are making a desktop version that's a lot more simple to use, and they're still updating it they're working through that. I'm part of one of their little groups on that where I try to give feedback. I'm trying to get implied moves, expected moves into the platform because they do have some options tools in their desktop trading platform. It kind of looks like Webull, the integrated trading view. So we'll see. We'll see how it turns out. It's still in the early stages of it. Oh, thank Exo. I appreciate that. Thinkorswim app on the phone is awesome. I do use Thinkorswim. I don't trade on Thinkorswim, but I definitely use it for like, I'm just so used to the product of Thinkorswim. So I like Thinkorswim's. I never executed on there, so I have no idea how it works there. So I can't really speak to that. I've executed on Webull. I think Webull's fine, but I'm still pissed off about that one time that I got locked in a position on the queues and it would not let me out, and that still irritates me. And I know any brokerage that can happen to, but I was already like getting to the size where I was like, I don't feel like I should have my money in Webull. Like, I think if you trade like smaller accounts, I think you're totally fine, but I needed somewhere with a little bit faster executions and better executions. No. I'm not flexing about being a beta tester for Interactive Brokers. Anybody can know the platform. The small flex. No. What I mean is, I'm part of their like thing where they take feedback and stuff. But anybody can go to their beta or their platform. I don't think that I have access. I get invited to some of their webinars that they do. Their work webinars where we can provide feedback and learn about some of the features and do that. But I think everyone has the same access. Yeah. The blue line is the quarter to date anchored volume weighted average price on the SPY. So if I go back, this is the anchored volume weighted average price quarter to date. So basically also it's October, right? So October is the new quarter. So this is month to date, quarter to date. So basically all this is saying is we've been above it, and price action is basically saying, based off of the time and the volume since that date, people have been like in the green, right? And then you can see we came back to test it. We made a little bit of a U-turn. The U-turn trade is something that I really like. U-turn, undercut, right side of V. You probably heard of a million names. It's a funny thing about technical analysis. It's the same stuff, but it's just renamed, right? Like it's the same thing that was talked about in old books, and they just rename it, repackage it. It's the same thing, right? The rubber band trade, right? We talked about how it extended like a rubber band, snap back. Like I call it a rubber band trade. Or I could call it like I don't know, call it whatever you want. That guy sounded with their target. What happens if Qs go positive for the day? That'd be crazy. That'd be wild. No way. In 1 hour, come all the way up here. Holy macaroni. That'd be insane. And I say that'd be insane because the implied volatility for Qs is not allowing for that type of move for the rest of the day. It's 1.6. So, we're at 487. Even up to the daily expected move would be quite wild. But floating around the weekly expected move probably makes the most sense. Huawei. Hey, what's up, McKinsky? Yeah, I can pull up charts, various stocks. I pulled up a lot of like random names. We're in earnings season, so a lot of that kind of flip-flops. I mean, one of those charts that I like was CA. Let's take a look at this one because I was kind of considering trading this as a swing trade. Was CASY. It's been building a base for about 4 or 5 months here. It's getting pretty tight here on the right side. It's above a rising 20-day or above a rising 50. Let me remove these zones. I'm going to get this out of here. So, I mean, I like how this is kind of setting up. So maybe play a breakout of something like this. Looks like the 400 is the main level of interest. And then maybe a stop down here, a stop right here. So if I'm looking at like I am looking at stuff that's setting up, but now we are in negative gamma territory, right? Now we are below a 5-day moving average. So now I got to be a little bit more cautious on adding more positions. I mean, we'll see, man. The gamma flip line is right here. We're only 20 points away from it. So For all we know, we can be there tomorrow, or we can be down here, right? I'm just more cautious in this this kind of realm. I did talk about Google. I like Google, how it's setting up. I think that if we start breaking above the high of today, I think that that'll look pretty good and maybe even set up for a move through 170. And then I like Microsoft, how it's pulling back. After a pretty strong move, it's been pulling back into still a turning around 50-day and 200-day that's still inclining. So if we're going to get a year-end rally, I mean, I'm looking for these type of names, like, because I want these to be the names that participate and make big moves into the fourth quarter. I don't know if they're going to, but if they make sense from a risk to reward standpoint, they fly back up to the highs. I mean, you're talking like, here's your risk, and then here's your potential reward, right? For all we know, things are going to come apart at the seams. Like, right, we have election risk, we have geopolitical risk, we have all this stuff. So all I can do right now is really just watch the shorter term trends in the flip line. All right. And then another aspect of all of this is 10-year yield. It's been flying. 10-year yield has been flying. The dollar has been flying. And I just want to reiterate this once again. I'll talk about it maybe on tonight's stock market brief, but what was the dollar doing into October of last year? Does anybody see that? The dollar flew into October. We're doing the same thing. Boom, we're flying. So you see seasonal strength in the dollar. But then this is funny because we saw this earlier. What was the 10-year yield doing into October of last year? Look at the high, right? It came up to 5%. Okay, that was the high. Remember how everyone was like, it's going to 5%, which basically did. Let's be real. That day was October 23rd, 2023. Today, after a strong move in the 10-year yield, it's October 23rd, 2024. So see, both seasonal type moves are happening. What happened the year prior? Let's take a look. What was it doing into October? Where was the high? Oh my gosh. The high for the 10-year yield was October 21st. Okay. Let's go the prior year. What was it doing? It didn't make a new high. It made a high over here, but it was ramping. It ramped to what? October 22. All right, that's so crazy. We got to make a chart and post it on Twitter and maybe talk about that on tonight's market brief. That's pretty funny. Watch, somebody's on my stream right now, probably on Twitter, and they're seeing this, and they're also a finfluencer. They're going to start posting this right now on Twitter. They probably already have because I talked about it earlier. They're like, look what I found. But somebody actually said somebody brought something up on this stream. They're like, what do you think the 10-year yield's going to do? And we were like, we noticed that. It was funny. Took your SPY position off, Christopher. Too good for data. Let it pass. Hey, let's go, man. Lock in some profs. Lock in some profs. Like I said, it's very common to see undercuts and expansions back, come back to the weekly expected move. Like, for all we know, the market might not like what Tesla does, and it brings the market right back into the weekly. Or it loves what it does and it comes right back up to like something like the quarter day anchor volume weighted average price. I don't know. What we do know is we can only control 4 things, and none of that has to do with where price goes or predicting where price goes. I said I had to go to the restroom and get some more water, and I still haven't left. Thanks, tree trunk. Should we build out a chart right now of the 10-year yield and post it on Twitter? Or X? Let me go get some water and go to the restroom, man. I gotta take a break for a second. Give me a second. All right, hold on, let me see. Somebody's posting. All right, give me a second. If you're new here and you're on YouTube, not familiar with the channel, and you like market briefs and stuff like that and some levels, make sure to subscribe to the channel. We do have some new subscribers that have been floating in. It's always greatly appreciated. If you're following on Twitch or Twitter, make sure to follow. Still in a rocket ship. I forgot about that. Again. Our fearless leader. You're funny. All right, we're coming back into the weekly expected move right here, people. I'm going to go ahead and keep this on the screen. Remember, sometimes this can now act as a potential, flip level, right? Once we break it, sometimes we've seen it act as resistance. I don't know if that's going to be the case here, but we are coming back into it after a little bit of a reflexive bounce. Bouncy poo. I'll be right back. That's not what I wanted. What do I want here? Rocket ship videos here. Stop posting the market show on Patreon. I don't know what that means. Oh, are you talking about the midday updates? The midday updates, I don't want to post to YouTube because I don't want to make a title and I don't want to make a thumbnail. It takes too much time. I could potentially do unlisted, if that's what you mean, but I don't really know. Okay, I'll be right back. What are you guys doing since I've left? What is going on? Okay. Oh, thanks, Nicholas. The market show. Sometimes you just post the market on. I post it on Patreon and not YouTube. When? I think you're talking about just the midday update. It's not like the full show. There's been like one time where I just did it on Patreon because I didn't want to make I didn't want to make a thumbnail and title. So I just put it on Patreon for the main market show. But the only times that I post it mainly on Patreon is if it's just a midday market update. Because I don't want to make a separate video for YouTube and do all like the configurations and all that stuff. It's just too much time and too much pressure, and I can't get it out fast enough. Go live on Discord would be kind of cool. I don't know how to do that. Actually, you know what? I've seen somebody do that. I got to look into that, how I can do a live on Discord, because if you're in the Discord, maybe I can make that like an extra thing, like a benefit or something like that. Is it safe to operate while you're drinking? Just water. It's the air up here. It's a high altitude, you know. Well, not really, but high altitude from where we were. Let's hop back into my computer desk. I'm hopping back into my computer desk. The Fight Club reference. Can't tell you how many times I've been called Edward Norton. It's happened a lot. Not so much recently, but when I was a little bit younger, and he was too, it was really like, there was a time where we kind of like melted into each other, it felt like, and I would hear it like almost every week. I'm out in Placer County, Sac County. Okay. I'm going to Oh, that's a good idea, XO. You can also make the channel perms so others can't turn on their mics. Oh, I would probably prefer that. I can probably make voice channels where other people can kind of hop in and talk with each other, but I wouldn't want to. Yeah, that's actually pretty cool. Discord's faster. I think Twitch is faster too. I think Twitch has a faster load rate here. And I only have 15 people over at Twitch, but I'm pretty sure it loads a lot faster than YouTube. I think. I could be wrong. But Discord, yeah, you said 4 seconds faster. That's a big difference. What is he talking about? Huh. All right, let's talk some more stocks. What are some other names? PACS is one that I kind of, it's already moving today. But PAX looks pretty good. I mean, take a look at PAX. I mean, just look at this thing. I mean, just take a look at the chart. You see these, first off, you had an earnings move. Boom, gapped up, pulled in. These are the things that I like to look at. Okay, another boom. Okay, we came back into here. It's resistance. We came back into an inclining 50-day. You're seeing higher lows build into a pivot of roughly 42 and some change. And we're right back here. So you play a breakout, have a stop down here, or it's under swing low, whatever you do, choose to set it up. But this looks pretty good. I mean, it's holding up rather well. Price is contracting into this pivot. So like these are the names that I would be like, yeah, I'm interested in like maybe establishing positions in these. But as far as the position sizing goes, it has to be smaller given the context now that we're under the flip line and below a 5-day moving average. So if I'm adding exposure, it's going to be smaller because I'd rather just prefer to just monitor what I got on and, you know, keep my P&L curve somewhat stable, right? Right? All right. Because we don't know. Like, what if SPY does this? What if it does this? Poof, comes right back down. That would scare the living bejeebus out of people. That'd be a big move down to 57.50. I would actually kind of encourage that move. Let's see if market net flow changed at all. Market net flow did turn. We lost convergence right about here, and we've moved up a little bit. This is where you have those counter trend moves. But the green line is still pressing downwards. It's not like the greatest look. So 578 on SPY. It looks like it can have some resistance. 577 is where we can potentially magnet to. It's a little bit higher, but so 578. So getting back up into this range at around 578. Could be a little bit hesitant there on SPY if we do want to press a little bit more up here. Marijuana, cannabis tickers, we can talk about those. I traded those for a minute and then they just became out of favor. We'll look at MSOS. I mean, shoot. I mean, things got real tight right here. That would have been nice to see. I just didn't have my eyeball on them, right? The 20-day started sloping up, the 50-day. We're still kind of under that 200-day, so I'd prefer for longer-term holds to be back above that. MJ, I mean, these things have been going sideways for so long, but you can see very similar. We kind of broke out here. Some good volume. So maybe it is trying to start something, but got to get back above that 200-day. If I go to the weekly time frame, yeah, we've been going for a sideways for a while. So we want to get back above these 200 days, right? And we could very well do that quickly. The MACD is crossing over. It's been a while since we had a bullish crossover. The last bullish crossover was over here on the weekly time frame, was November of 2023, and we did definitely go higher. HITI. Not too familiar with what this is. Yeah, I'm not too familiar with this. I mean, it's a little bit volatile right now on this move up, but you can see these higher lows that built right into this pivot area. So these are the type of trades where I'd look to probably trade more in these ranges where volatility expands. But if it starts coming out like this, it's a little bit too rich for my blood, where like just this high to where we are right here, you know, it's minus 12%. So I wait for things to how they set back up again, maybe for the 20-day, 50-day to catch back up and see if it sets back up into a way that we can retrade it with lower risk. But if I were to enter here, it's like, where do I put my stop loss? Down here? Well, then my reward has to be way up here, right? To even make a little sense. And, you know, would I be willing to risk, 30% or whatever, drop? One position would have to be very, very small, where it wouldn't affect my portfolio in great detail there. Recovery on IWM or Ready. Yeah, Ready's bounced a little bit from that 50-day. I think there's opportunity here in IWM. I mean, it's been building higher lows, right? And we saw a little bit of a breakout here. Now it's pulling back in. And it happened to do so while we saw a little bit of a, move higher on the 10-year yield. So if rates do come in, which who knows if they're going to, but if they do, maybe that might benefit some of these smaller cap names. We're still below a declining 5-day moving average, so you got to just kind of be patient with these ones. If I pull up the vol bands, see the implied move for the day, go to Russell 2000. We came right into it, just undercut it a little bit. Pretty cool, huh? Pretty cool. Let's take a look at Apple. Apple vol bands, settings, no, studies. Apple is trading back at its weekly expected move, but well under its implied vol move for the day, which was 1.84%. It's down 2.68%. Go to the daily expected move here, go to the daily time frame. It's a pretty large move there for Apple in a single day. We haven't seen a move like this for a little bit. And we have earnings not too far away, but overall, I mean, we're just seeing a pullback like we did, right? We saw a pullback, moved up higher. We saw a pullback. It was a shallower pullback. Boom, we moved up higher. We're seeing another shallow pullback. Well, it could turn into something big. We haven't seen the strength yet, but we are pulling back just into really a prior level of resistance. SPY's coming back into its weekly expected move, not too far off. The level that we mentioned a little bit earlier was, 578. May get a little hung up there at 578, which is maybe 577. It's slightly above right now, which is good. But 578 would be right here. So I'm just going to go ahead and mark that as a potential little hang up area. It's not necessarily going to happen, but, I'll show you why here in a moment. So there's a gamma level right there, 578 in the shorter term. But you can see this kind of big bar right here. Price action on these green bars, if price is below it, it can repel price away. Red bars tend to magnetize it, so that can change, but let me go by strike and see if anything's different from that perspective. Yeah, it's very recent that's the case, because on the full exposure for the day, it's a pretty small level where you have more of a magnet to 580, and then 582 could be the bigger repel. IBM's been a beast. ER today, yeah, they're going to be reporting. IBM has been a beast. It's pretty wild. And looks great, but okay, why is that doing that? Fine. So the expected move for IBM is 1373 right now. So that's a move up to here. One standard deviation, people, right? So if it's very typical to tag these. It doesn't mean it can't go above or below it. I feel like most people know that, but I have to reiterate that just in case. Activate, try, duplicate. So you're looking at roughly down to 220 for the downside. up to 247 for the upside. It has been a beast. It's a nice little flag right here. Has the market already priced in good earnings? And now it's going to look to guidance? I don't know. Have I ever used a price momentum oscillator? Yeah. I mean, which one particularly? So VIX, I don't really do analysis on the VIX. My analysis on the VIX is a little different than most. Like I'll look at like volatility futures and I'll look at the curve of it, right? Like if it's in backwardation. So you can go into the VIX and you can see like the current one in its trade tab here, and you can just go to where are we at? Where's the active contract? Why is it? This is one thing that I dislike. It's like, how do I move it down more? I would prefer that. So the active contract here in Nove, you can say it's at 1927. And that's actually technically higher than if you look out a little bit, right? So it's above December currently, right? And it's currently above the January, right? So when you see this, the way that you analyze it is, I hate using the words backwardation and contango because it gets confusing. But when I look at that, it's basically saying that the market sees something happening in the here and now than they do more so in the future. So it's pricing in the volatility now. The expectations of something to happen, right? The event to happen, fear, or whatever the case is. That's a typical curve. It would look like this, right? Where you'd have a contract here, a contract there, a contract right, we're looking outwards, where it says, yeah, there's more fear into the future. Everything's fine right now. But if all of a sudden you're in backwardation, right, where you see, hey, there's, we see fear, we see things happening right now. This is where we're going to see movement. That's where we're at right now. So looking at the VIX, right, if I'm not going to use technical analysis per se, you can see these squares, right? See these squares on my chart? Let me duplicate this one. When I showed this on Twitter or on X, I was like, wouldn't it be a cool signal if you knew this? And everyone's like, oh yeah, it's not a signal, it's not an alert, you're just drawing boxes on a screen. And I laugh because every single time I'm highlighting right here, these specific from the start to the end, from the start to the end, from the start to the end, start to the end, start to the end, and so forth. This is when we went into negative gamma territory, and this is when we came out. This is when we went in, this is when we came out. This is when we went in, this is when we came out. My point is, if you're watching the flip line, oh, look, we came back into the weekly expected move, and we kind of pushed away from that a little bit there. If you're paying attention to the flip line, and it changes frequently, right? They're dynamic, but I update them daily. Look at them daily. Let me get this on my screen. It's confusing me. When you're in negative gamma territory, this is where volatility can increase. So like I said, we crossed through it at 11:10 Eastern Standard Time. So if I go to VIX on the daily time frame here, we go back over, we say, oh, right here was 11:10 Eastern Standard Time. This is where we crossed through to negative gamma territory. And what did we do? What did we see? Well, we saw volatility increase. Okay. Now the market's rising, volatility's coming in a little bit. We might close outside. We might be in negative gamma territory, maybe for a day, maybe not for long. Maybe it's just a quick little snapshot. But when we're in negative gamma territory, volatility typically increases because the dealers, they sell into selling, they buy into buying. You get more volatile swings. That's just what it is. And if you understand this, you can adjust how much risk, and when you start to feel, you can adjust the sizing in your portfolio to know when to add exposure and reduce. Understanding that the conditions of the market are changing are like paramount to a strategy. You can check the gamma flip level. There's services that offer it, right? If you're in the Discord, I typically post in the day trading pit. That's not part of the service. I just kind of do it. But you can also, if you're in the Discord, you can go to the query channel and you can type in the command for trading ticks, and they can supply you the flip line. That's only $9 a month, or you can use a service like Tier 1 Alpha, Spot Gamma, Tradietics, Gamma Labs. But there's no place that I know of that just says, hey, here's the flip line here, it's free. You know, they typically, I mean, you could probably find it somewhere maybe, or you can just do the calculation yourself. I mean, you can get all of this data from the CBOE website and compile it with your own Python script to get you the gamma profile and give you, but you need your own like, you need your own way to aggregate that data. So Tradietics query, Tradietics flip line is going to be a little bit different than Tier 1 Alphas. And Tier 1 Alphas is going to be a little bit different than Gamma Labs. So I always tell people, you pick one. Look, like, you think of it as a zone, right? So the Gamma flip line, it's like, oh, I'm immediately bearish under it. No, no, no. It's like a zone, right? So if we start closing under there, you know, the line, be more cautious. If we go above it, you know, that's when dealers look to buy the dip, sell the rip, right? It's a zone typically. And when you break from these zones is when you really start to see things change. The Tradietics command for Gamma Flip in the query channel. So if you go to the query channel in the Discord and you hit the pinned comment, it's going to show you a bunch of different things that you can do. If you scroll to the bottom of that pinned comment, it's going to tell you miscellaneous commands. It's TR. I'm just going to go, if you're in the Discord, I'm going to just type it in the command. I'm going to just type it in the query right now and you can copy it. So it says symbol. I'm going to change the symbol over to SPX. You can put any symbol there. This one takes a little bit to load. And I'll show you all here what it looks like when it comes. Because sometimes, like I reached out to Tradietics about this, but sometimes they post it, but it doesn't show the number of the flip line. It just shows you the chart. It's supposed to show the number. The last time I checked, they fixed it. It looks like they fixed it this time too, so that's good. Let me show you. So I posted the code in there in the query channel, so you can just look at that. But then this is what it looks like. So I type it in, it pops up. So the flip line year says 6031. I don't think that that's updated, to be quite honest. So this is one of those things where I'm going to go back to them. I'm like, hey, why is the flip line at 6031? Because now it's showing, however they aggregate their data, you know, we're now under it by 200 points. The total flip. So whatever they're doing as far as aggregating data is significantly different. Because the Gamma flip line that I'm looking at, come on, load, is 5810. So I don't know how they're compiling their data. And then Tier 1 Alphas, I don't know what theirs is, but theirs is pretty spot on to what I show on in the day trading pit. So sometimes, like, you have to go to like Tradietics, or I go to Tradietics, and I'm like, yeah, this seems off. Like, how are you guys aggregating your data? A lot of the times it's on, but like, I don't know, total flip line right there seems off a little bit, in my opinion. And then it doesn't show the next expiration here, which it typically shows that number there too. So, but that's what you type in. Usually it's off a lot, like 15 points that I've noticed, 20 points, 25, but not 180. That's kind of dramatic. Spot Gamma, you said, okay, so Spot Gamma is at 58.17. So Spot Gamma is right on with me then, because I'm at 58.10. And maybe, honestly, the Tradietics one, maybe it might actually have to wait for the day to close for it to be fully updated. So I'll pull it again after this day closes. SPY 578, there's a little bit of a magnet there. So this red line could be potentially the pull. So now it was green, now it's red. So 578 could be a potential still target area to kind of keep an eye on there. If we're going to see any more upside here in the price of these SPY cues and stuff. Thanks, Christopher. Tuning in. Have a good day. All right, people, we're kind of just in the happy place with the SPY at its weekly expected move. Very common to doodle around in these areas. I'd be very careful on big breaks from those levels, right? If we start expanding back through this, breaking down through here, watch carefully for S&P 500 to go about 50 points lower to 5750 from where we currently stand. Remember, if we break these weekly expected moves and the market has the risk incorrect for the week, you'll see dynamic hedging take place. You'll go into like the smaller time frame charts, like a 1 minute, right? And you'll see volatility. You'll see the contracts change like from an explosive like perspective. You'll see volume really start to uptick. 9,000, 10,000 contracts, right? You'll see big moves, 7,000, 8,000, like it's crazy. So right now, on average, it's about like 3,000. But once you start creeping up to these 6,000, 7,000 contracts per minute, that's pretty wild in the ES. Pretty cool, man. Pretty cool. The market's always hedging dynamically, by the way. It just, when the market as a marketplace comes together and has these weekly expected moves, when you look at all of this through the lens of like the entire market's incorrect, that's when like bigger volatile moves can happen because they have to adjust, if that makes sense. And you get just a wicked move of that whole selling into selling, buying into buying sort of ordeal, like volatility really upticks. Okay, and that all goes back to the gamma flip line too. It makes a big difference when you're also under the gamma flip line. Okay, I want to look at 0 date really quick here and see if anything's really adjusted. Chains 57.65, no, 58.15, 15 points higher. The main area of focus is still at 58.35, and we cracked through that, but it's just interesting that we didn't see any like huge move down here. I mean, 57.65, I guess, but that paired with some of the other stuff that we were seeing intraday kind of made me think that we'd see some sort of or wouldn't rule out some sort of a rally back. Now, a rally back to 58.35 would be, that'd be pretty intense. That'd be pretty crazy. I mean, that would be pretty crazy. Be cool. Would be cool. I mean, I don't have any short positions on, so I wouldn't mind. Thanks, Kevin. The market is tough. You're welcome, Sid. Tell you what's tougher, though. Managing your emotions. It's a tough thing to do. I guess the reason why it's tough is because we try to focus on things that we have no control of. If you know for a fact what you can control in the markets, and if you only focus on that, things are a lot different, right? So you focus on what you buy, when you buy it, how much you buy it, and then when you sell it. Those are the only things that you can control. You can't control if price is going to bounce at this level and where price is going to go to. Yeah, we're not going to move the S&P 500. I got, like, when I changed over to my little rocket ship over here, I mean, that was, come on, that was super lucky, right? That's not going to be the case every time. So don't put it in your head that those kind of things, you know, are normal, right? It's going to happen, but that doesn't mean those things are normal to see all of a sudden. But we paired it with a lot of things, right? One, an extension, a move that was pretty aggressive. Two, it was getting outside of some key levels and we were looking for strength. We didn't enter right away, and it's a good thing, right? Well, good thing you don't, because you want to see some sort of hint of strength, something that can maybe get the market bears, you know, covering or you know, worried to keep pressing shorts. Managing one's emotions in LA traffic is difficult. Sheesh, I bet. That's funny. Okay, let's see here. I mean, we're almost at market close. I guess I can hang around. We do have earnings reporting on a lot of names, so I guess I can bring up that screen and we could do that. What's reporting earnings? Let's do it. We got Tesla, LRCX, IBM. I mean, those are really the only ones I care. Oh, Las Vegas Sands. I was kind of interested in Las Vegas Sands. T-Mobile. We do quite a bit. Oh, ServiceNow. Okay. All right. Give me a second here. Let me set up my earnings screen. Keep an eye here. We're kind of at that weekly expected move, just doodling. That 578 level was almost tagged, by the way. Still kind of has a magnet to that level. Now we're just doodling now. Doom, 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 doodle. Don't doodle, doodle. I have earnings. Okay, so how many names are reporting earnings that we want to look at? We want to look at Tesla, we'll look at LRCX, we'll look at IBM. I don't care about Newmont. I guess we can look at CLS, maybe. ServiceNow. Okay, we'll pull up 6. Okay, I'll allow for 6. Hockey and earnings. That's hilarious. I love it. You know what, actually? Let me do this. Okay. 1 second. Oh my gosh, I messed up my charts. Son of a gun. Okay, it's fine, whatever. Sid Lucas recommended me? Nice. Wait, like Lucas, the Lucas that I know? Like from Elk Grove? Are we talking about the same Lucas? Okay, okay, so Tesla, front and center. We got LRCX. IBM. What's another name here that is we care about? I know somebody said Now, so I'll go ahead and put Now up. All right. All right, I'm just going to do CLS down here in the corner. Okay. IBM looks like it's going to just pop off. Fortunately, I can't trade it. KO is reporting. Coca-Cola is reporting earnings? No, they were... Wait a second. No, they reported already. They reported earlier this morning. Okay. Sorry, we're coming into the end of the day too, and I did initiate some sort of a trade, so I got to just watch this. SPY's coming into that 578 magnet level here. Give me a moment. And I'm going to draw out these expected moves together with all of y'all. Oh my goodness, this is insane. Let's go. Oh my gosh, my battery's dying on my Mac. I needed that. Okay. Sorry, I got to reduce some of this. Give me a moment. I don't tell people when I enter the trades because I don't want people copying. But if you notice when I turn to the rocket machine, or the rocket, that's actually when I executed. It's kind of funny. So give me a second here. And I definitely got lucky on that one because it kind of just went. But I'm never going to sit here and tell you exact entries and exits because I don't like feeling responsible. Because I feel like people will enter too big of trades and we can like take the same exact trade, 10 times. We can take the same trade 10 times and still, if you don't know the position sizing that I'm using, we can end up with different results, like vastly different. So that's why I do not do these alert services. I find them to be completely useless. I feel like there's a great way to sell things to people. Like, hey, look at all my alerts made me this money. But it's not the alerts that make them money. It's not finding winning trades. It's literally position sizing. That's what makes you money. That's what keeps you in the game. That's the only thing that matters. And unfortunately, that's not the sexy side of services. Apparently, I mean, it is to people that actually care. But okay, I'm almost done. Sorry, give me a second here. I'm reducing out. I took that little intraday trade, and I'm actually going to probably keep a little bit on, just to see. I mean, just because, right? I'm not adding much exposure to my portfolio when we're under these flip lines, and below a 5-day moving average. But if I'm up in a position, I don't mind keeping a little bit on, just to have it, just in case if this is a little fake out, shakeout sort of thing, because none of my positions really got stopped out today. All my positions remained active. The closest one to getting stopped out is technically, I guess, well, let me see. I guess Mara, M-A-R-A, that's down 5% on the day. But I took profits the other day, the other trading day. So I'm up still greatly on the position, and I'm still up overall. That was the biggest loser of the day for me, Mara. Oh. And Deckers. I forgot that I had a position on Deckers, to be quite honest. Oops. I'm going to have to pull that up later. I'm not worried about it because it's small. Sorry, people. Sorry, I'm trying to do that. This is why I don't really trade live, is because when I have to be quiet. It's too hard to talk and do this all at the same time here. I just want to make sure my risk is all set up here as we're going into this. Okay, because I didn't want my laptop to just shut off on me and have to cut the stream. Okay. Can I share past examples for learning? Yeah, of course. I talk about YouTube and all kinds of stuff. If you're more specific, maybe I can point you in the right video. Oh, for like learning, maybe like position sizing and stuff like that. Do I think it's a start of a crash? No, I don't. I mean, I don't know. I have no idea. Okay, so that 578, you can see that we kind of a little bit of a rejection there, but not much. We're just at the weekly expected move. Okay, okay, let's go back over here and let's do these moves. Extend to the left, extend to the right, extend to the left, extend to the right. I'm going to go ahead and duplicate this. We're going to just draw these out. I'm just going to draw some lines on the chart here, and then we'll adjust them as we come closer to the close. Let's do this thing. Oh, CLS actually looks like it's a... What is CLS? So what we're doing right now is we are drawing out the exact levels that the market's pricing as far as risk on these names for earnings, okay? I wish I could just click a line and adjust the entire horizontal line. I'm not a fan of Thinkorswim's drawing methods. There probably is a way to do it. I just don't know how. Okay, now what I am going to do is I'm going to go into the trade tab and look at the implied move for each of these names. So Tesla's implied move is now up towards $17 and some change, so $17.60. Now, I don't know where we're going to close. We still have 10 more minutes. So maybe I'll adjust the bigger ones as we come closer. But 17 buckaroonies and 16 cents. I'm just do rough numbers. That's fine, okay? Boom. Okay. LRCX. Let me also change my title here on Twitch. Tesla, LRCX, IBM, CLS, now, TMUS. Okay, so I just wanted to update that. Okay. Okay, so LRCX, we're looking at roughly a $5.98 move. This would be easier on TradingView probably to draw. I'm just old school. I stick to my ways. That's actually not true. I do adapt quite fast, but it sounded cooler. Okay. LRCX. IBM. 1322 for IBM East. Holy moly. Oh, we're good. Oh, we're good there. I forgot that I drew those out. I mean, I'm just going to leave them there. That's pretty spot on. Okay, so CLS. $5.69. Holy moly, that's pretty big. Let's go, dude. This little intraday chart here, like I would be interested in buying that really, to be quite honest. But earnings, man, they. Okay, service now. Got 6 minutes. We'll do a quick little recap on the market here in a moment. $56.35. $56.35. Uh-oh. Come on now. Oh, we already drew those too. I keep forgetting. Oh, come on. Now my drawing tool ain't working? Ah, 56.35. 56. Okay, I'm gonna just move this one up a little bit, mirror. Right there, and I'll move this up a little bit. There, okay. Let's go to T-Mobs. Did I draw these ones out too? No, I did not. Okay. $9.50 basically. They're going to be off by a little bit, people, because the market hasn't fully closed yet, but that's fine. I mean, we're going to get a rough estimate here. Like a pretty spot on rough estimate, to be quite honest. I'm being asked about interactive brokers. How would you do this on interactive brokers? In 2S, you just need to pick the price level tool. Price level tool, double click, and draw the price level. Wait, what? Which one is that? Is that the dollar thing? Get the fuck out of here. I don't want to talk about it. I don't want to talk about it. Thank you. Somebody save me. All right, into it. Okay, so thank you, Eric. Do you see the expected move for the nearest contract? Any idea how to do that for IBKR? So yes, in the video that I made for for the expected moves, I show you how to do kind of the calculations. So if I bring up this, for the earnings, right? Earnings is today, right? So you go to the nearest contract, right? It's after the bell. It says 2 days, okay? This is the earnings expected move. You can look at that in the implied vol. It says it right here. But sometimes platforms don't say that. So what you do is you go into the options chain for the nearest thing, and you could just basically add on, you know, the at the money ask of the call and the put. So for example, 490 plus 385, right? Or the put, whatever. But basically, what does that come to? So we'll call $5 plus 380, right? Almost $9 and some change, right? $9 and some change. And that is the expected move. So that's a quick way to do it, to give you a rough estimate of what the market's pricing in. You know, has Tesla averaged a 9% plunge after earnings for the past 4 or 5 quarters? It maybe has. I don't really know. We can look at it. But the market, you know, the moment you think that the market's going to do exactly what you think, then it does something else. Like, I prefer to just kind of wait it out. I don't really play trades based off what may happen. I'll play the trade based off what is happening. And in earnings, it's too binary for me. Like, you can be right, you can be spot on, but the time that you're not and you oversize the position or it's off a little bit, it could be detrimental. So here is the expected moves. Tesla, we're looking up to and around 232.50 or down here at 197.50. That's only one standard deviation. Lamb Research, we got about $79 and $67 below us. IBM, we're about 247.50 up above, 220 below. T-Mobile could be up to 230 or down to 210. ServiceNow could be up to 960 or potentially down around 850. CLS down here at the bottom left looks like we can go up to 63 and or 52. There you have it, folks. He said it better than me. Yep, Tesla we got up here. There we go. There's the bell. I got ServiceNow right over here. Nail, I don't know what Nail is. I don't have that one on the screen, but we have ServiceNow. We got Tesla. Lamb Research, IBM, T-Mobile. Oh, T-Mus is what you meant. Okay, yeah. T-Mus looks like it's getting a little price action here. We'll see if it's actually earnings that just dropped. Looks like it's about to. S&P 500 on the day. We closed right back in the weekly expected move, right about that 578 we marked out. So we did get that bounce back. Now we play the waiting game. Yay, it's over. That's pretty good. I would prefer earnings to pass in just the market just to do that. There's a little tick, doop, done. But no, everything has to be so intense. Tesla's tanking? Nah. Well, I mean, it might. I don't know if you meant like right this moment or when earnings come out in like a few minutes here. I guess it's making a little bit of an intraday move. It just looks so small on my screen because the implied move is it's going to move a lot here in the very near future, and that could be a tank. We don't, you know, I don't know. Still nothing. T-Mobile looks like it's getting the earnings now. T-Mobile was a very bullish chart, by the way. Let's see here if they do guidance or anything. There you go. Market likes what it sees so far. It came right up to the implied move. Can it extend past it? Yeah, dang straight it can. That's where we're at right now. Tesla on the move. Tesla's reporting. Let's go Tesla. Did it report? Yeah, we'll see how that one finishes up. T-Mobile has exceeded its implied move a little bit, and we're back in there. Good move. Still has room to go. Remember, things can change quick on an earnings call. But right now it is it's up to 225. Lam Research just reported. So far, the market sees it as positive on the initial reaction. We'll see how things shape up. So far, T-Mobile was pretty dang strong. Like that was a pretty good move for T-Mobes. IBM looks like it's coming out. We're seeing a little bit of movement there, so it should be just on the cusp of announcing. Man, AT&T made a big move too on its earnings. It was pretty impressive. Man. Everything is doing what the market anticipated it would do. So nothing's out of the normal right now. If anything, it's T-Mobile right now, which is moving a little excessive past its implied move. So the market really likes what it saw in this current context here. I'm actually going to change T-Mus to T because I want to see if T-Mobile or AT&T is responding in any way, or Verizon. Verizon made a pretty decent move today. Verizon was up 3% on the day. That's actually very incredible. It's Newmont. Miners down. Newmont down slightly there. What was it? What would I put here? Per service now is right there. Okay. Okay. All right. Tesla got a little little room to go here still for its implied move. We got IBM still waiting on that. Lam Research still has a wide open implied move. Tesla looks like it's coming up to it right now. Get a little press up there. All right, I want to see the impact that this has on the markets right now. So I'm going to go ahead and go to the SPX chart. We're moving towards that gamma flip line still. So we're still in negative gamma territory. Remember, this is selling but gets selling, buying but gets buying. It's common to see V bottoms. I don't like V bottoms, but it does. That is the case in a lot of situations. Oof, there's IBM. Tesla tagged its implied move at 232 and some change. IBM tagged its lower implied move and is currently trading outside of it. It's a big move there so far. Tesla has reached its implied move and is backing off slightly. T-Mobile got outside of it, but it is coming back in. IBM is bouncing a little bit from its lower implied move. Earnings calls hasn't started. We're waiting on service now. It is looking like it moved a little bit here, so I don't know if it, no, I don't think it reported yet. And Lam Research still is kind of wide open, but the market likes what it sees still right at this current moment. IBM's floating around its lower implied move. There's service now, looks like it's reporting now. Nice trade, Blue. Ooh, T-Mobile is getting a little bit of a hit there. Oh, okay, no, it's just a little flutter. I don't know what that was. So ServiceNow has seen a little bit of sell side. Its lower expected move is still down there towards 850, about 28 points lower, 25 points lower. IBM is trading in and around its lower expected move on the day. Tesla has already tagged its upper implied move and is holding up rather well. LRCX still looking fine. ServiceNow looks like it's coming into its lower implied move. 860. It was 850, but I mean, it's pretty much a tag. We'll see here if it comes through. CLS still hasn't done anything. I'm not. I don't know anything about CLS. It's over my head on that one. We'll see. IBM's just chopping around right now. We'll see. We'll see what IBM does. All right. There you have it. Everything's acting as expected so far. Right? You understand why these implied moves are so important now? It gives us a good idea of risk. It doesn't mean we can't break them, but it gives you an idea of where the market could take price. Right? So we came down here. I mean, this missed by $4. I mean, and it wasn't even accurate when I drew it. So we've hit the lower implied move there. T-Mobile, we came outside of the implied move, right? Came back in a little bit and we're just doodling there. Tomorrow, we can break through this and really start moving. That's a possibility. Now I wait to see how things set up on the higher time frames. Right? IBM trading right there at its implied move, came under, right above it. LRCX still has a pretty large implied move for the day. And CLS, I don't know if they reported yet or reporting later. Let's take a look at Qs in the aftermarket. Seeing a little bit of a pop, but really, honestly, nothing quite like newsworthy. I think that's it for us here today. I'm not going to stick around for the earnings calls for these things. I want to get outside, get some sunlight, maybe go to the gym. SPY did tag its lower weekly expected move. It's been a while since it did that. I think I'm going to put together a quick market recap video for YouTube because I did think that was pretty cool on the 10-year yield stuff that we found today. And it has a potential to really move these markets, man. I just feel like if we can get back above this 5-day moving average, just right here, it's not that far off, and we get back into positive gamma territory, man, this could be just one of those bear trap type of moments. And it's really setting up for something. Could be setting up for something. So hopefully today's session helped out. Appreciate y'all being here. If you haven't subscribed to the channel, make sure to do so. Whoop, whoop. Oh, greetings from Switzerland. Whoa, cool. That's awesome. Hey, EXO, you're probably right. That's funny. All right, see you guys. Guys, gals, everybody out there. Appreciate tuning on here on X, Twitch. Appreciate you being here. Appreciate everyone out here on YouTube too as well. Wild day in the markets. Thanks, Mr. Bobber. This is the stuff that happens in negative gamma. Look, it's pressing up here. Let's get back up a positive gamma. Let's do that. And let's see if we got some more juice in the market. I still think we're going to 6,000 on the SPX. I think that's a main target to watch for. I'll try to compile my thoughts and talk about it on a quick market brief tonight. So if you have the ability to do so, make sure to check it out. But we got a lot of focus up there at 6,000. All right. I'm tuning off. I need a break.